days, and the same thing happened previously. Is there a difference in that these companies are actually making money, Sarah? Because, you know, during the 1999-2000 boom, it seemed like driving revenue higher was the only important aspect, and there was no focus on profits.
I think that's a big differentiation, and I think that's one of the reasons that people are less worried about the valuations here as they were in that time frame. You also saw in that time frame a lot of large companies that were selling equipment, financing their own customers. And right now you have a very different situation because the biggest buyers of some of these chips and servers are the largest companies that have a lot of cash. There's no need for companies to borrow.
How are you guys doing out there?
AI chips, for example. So I think it's a very different drop, and you have a much bigger, more concentrated tech picture and a much more concentrated customer base. And while there is some risk in that, it's certainly the best customer base to have right now because it's a base that has an enormous amount of cash and a willingness to spend it.
Are you talking about other businesses like B2B commerce, or do you mean consumers still have enough cash and are willing to spend it?
I think for the current AI boom in the chip space and in the server space, the companies that are buying things like Google and Meta and Amazon all have enough money to have a large CapEx program to start putting some of this stuff into place. And back in the 2000s, you had a lot of companies that were financing their own customers because the customers wanted to deploy switches and they wanted to deploy dark fiber, but they didn't necessarily have the revenues that were commensurate with their needs. And I think right now you see that. And I think on the Apple side, you've seen a little bit of consumer enthusiasm for the changes that Apple is going to bring. So I think, AI has been a part of the consumer technology world for a while. It's just the large language models that have made it much more approachable and or much more able for people to understand what's going on there. So I think that there's a willingness for people to spend on technology. There's certainly a willingness for the large tech companies to deploy capital in specs to continue to add to their capabilities. So I think that that's a little bit of a difference from the last cycle.
Right. I can understand that, companies are waiting in line to get their hands on as many chips as they can. They want to have space at server farms, et cetera. But I just wonder about the strength of the consumer. UBS, I was just saying this morning, upgraded Best Buy because they expect droves of consumers to go in, or at least online, and upgrade PCs to AI capable. We've seen this, with Dell and others. But does the U.S. consumer really have enough money to participate in this upgrade cycle? We have worked our savings down to zero, and you no longer have the stimmies that you had during the COVID period. So can we still buy as much stuff as Wall Street needs us to?
Well, I think there's been a lot of discussion about the bifurcated consumer and the fact that on the low end, you're seeing a lot more pressure. You're seeing a lot more pressure for folks that have not kept up necessarily with wage growth as everybody else has. And on the high-end consumer, you're seeing a very high propensity to spend. So I think on that technology side, and certainly the way certain things like your phones are no longer subsidized by the carriers, but at the same time, they've made payment plans. So I think that people do have an urge to get the latest and greatest, and they don't want to be left out. I think there is a propensity for that consumer to continue to spend, even though the savings isn't as strong as it was. And I think to the extent that you had a huge upgrade cycle on the PCs when we had COVID, at some point, now you're 3-4 years after that, everyone buying an extra computer because they needed one. I think there probably is some room for additional expense, especially if people think that they're going to get some hot new ability to use that technology.
Sarah, what do you think about diversification now? Bloomberg had a great story by Lou Wang a couple of days ago about the fact that, if you put all your eggs in one basket, just buy a stock tracking fund, you've trounced any kind of asset allocation fund. But it doesn't feel safe to do that. Do you go for the convexity trade? Do you look at amplification in AI specifically, or do you think diversity is still the right way to invest?
Well, I think that you always have to have a mix because in the end, yes, this has been fantastic. And if you were just looking at the Qs over a period of time, you could say, well, that's trounced everything. But that doesn't always last forever. And especially when you start to see valuations get a bit stretched, at some point, there's going to be a digestive period, even if there isn't a big drop in the market, there's certainly going to be some sort of consolidation. And that's when you also want to have some participation in other areas. And I think right now that's been the big challenge, because the economy, the data is coming in somewhat mixed. People are a little bit concerned about what's going on outside of the technology front. But the valuations in the non-technology sectors are not nearly as daunting as some of the technology valuations. So I think you absolutely have to participate in technology, but I don't think you want it to be the only thing that you have. And certainly you've now got a fixed income component to a portfolio where for a while you didn't even have that as an option.
Sarah, great getting some time with you. Thanks so much for joining us. Sarah Hunt there, Chief Market Strategist and Partner at Alpine Saxon Woods. Coming up, Bill Gates is ready to go nuclear.
Of all the climate-related work I'm doing, I'd say the one that has the most bipartisan energy behind it is actually this nuclear work.
Why he's ready to put billions more into a next-generation power plant next. This is Bloomberg.
Hey, thanks on the Father's Day wishes. I'll be back with you guys in just a little bit. I got a quick thing I got to do with some attorneys. I got to send some documents off. So I'll be on later this morning.
I'm a National Geographic explorer, and I work with pink river dolphins in the Amazon. Dolphins are very clear indicator of the health of the river. So we are trying to evaluate their health. Already we have covered 52,000 kilometers of rivers. And we have trained more than 500 people. We can learn about the whole river system from these wonderful mammals. I want to connect all the planet with the Amazon.
The Amazon is a vast and highly interconnected ecosystem. 3 million plant and animal species and 40 million people live within it. A key part to this connectivity lies in the water that travels from the top of the Andes Mountains down to the river mouth at the Atlantic Ocean. To investigate this connectivity further, Rolex and National Geographic have launched the Perpetual Planet Amazon Expedition. I'm joining 7 teams of explorers working throughout the river basin, an area threatened by climate change, deforestation, and biodiversity loss. They'll be gathering data, conducting scientific research, and gaining local insight on this crucial region. Their work is shedding light on how best to protect the river basin so that it continues to sustain life well into the future.
The world needs ways to reduce carbon emissions,
especially for heavy industry. We're working on solutions in our own operations,
like carbon capture and clean energy from hydrogen.
So who are we?
Believe it or not, ExxonMobil. And these solutions can help businesses like yours.
Or yours.
Or yours.
Surely expecting Bank of England gilt sale results.
Let's deliver.
I.e., when markets are challenged, don't get spooked. Don't get involved in investment hobbies. Investment hobbies are generally not profitable.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial News Pro for a year's worth of our service for the price of 1 month and save 92%.
Of all the climate-related work I'm doing, I'd say the one that has the most bipartisan energy behind it is actually this nuclear work. If we unleash the innovation power of this country, we tend to lead. And I feel great about the support we're getting from the federal government in this nuclear space.
Bill Gates betting on nuclear power, plowing billions of dollars into a plant in Wyoming. His startup, TerraPower, broke ground last week for the construction of a commercial reactor in the state. Joining us now is Bloomberg Power and Renewable Energy editor Will Wade. I'm so glad to get you on the show because I was listening to you on Bloomberg Business Week with Carol Massar and Tim Stenovec. You had gone out to see a new reactor brought online. Not one of these new kind of fancy Bill Gates reactors, but like an old school one, right?
Yeah, I was down in Georgia a couple weeks ago to see the Vogtle 4 project, which finally came online. It was 7 years late. It was way over budget. It's like more than 100% over budget. And it's huge. It's, you know, it's a giant gigawatt plus reactor. This TerraPower one that Bill Gates is building is more the 300 megawatts, so it's much smaller, and it's a much different technology that they're trying to build.
But the thing that struck me is when you went to see the Vogtle reactor open in Georgia, you were like, nobody else is opening these, right? It's obviously, it's so late, it's so expensive. Who wants to get into that? Now here comes Bill Gates, and he's like, I want to get into that, not on that, you know, gigawatt level, but at a smaller level, and he wants to do many. So is it possible that this could pick up, that it could catch on?
It's possible. I mean, the thing that you need to keep in mind is it's all about climate change, because nuclear is carbon-free power that runs around the clock. Wind and solar don't run around the clock. Hydropower does, but it's hard to find places for it. Only nuclear can do that. But
so the Bank of England sells £600 million of bonds in auction after receiving £707.1 million in bids, with an APF gilt sale operation cover ratio of just 1.18.
But right now, it's sort of all new technology, new build, and everything that new is, you know, slow and time-consuming.
Well, and what about the waste? Is there still that problem of where to put the spent, you know, uranium or whatever, or have they dealt with that?
Oh no, it's still there. Every nuclear power plant has old spent fuel rods sitting out back, and they're going to be there. But I think that's
They're going to be there for a while. Huh?
Well, I mean, they're going to be there for a while, and it's deadly for thousands of years. But I look at it this way: like everything is dangerous. If you live near a coal plant, you know the emissions are bad. You know you're likely to get asthma. Gas plant, you know, everything in the world is dangerous. Nuclear is also dangerous, but they take the waste issue very seriously. And there's not that much of it.
Well, okay, so if not the waste being a problem, I grew up in the wake of 3 Mile Island, as did you.
Of course.
We all saw Fukushima rock the markets, and they're still recovering from that. Like, can that part of it be contained? Well, with new technology, right? This is what I'm wondering, because Bill Gates is kind of a preacher in terms of nuclear can be safe. Nuclear is clean. So is he right?
Yeah, there's definitely ways that you can design new plants that they are safer. Nothing in the world is 100% safe, even if you stay in your bed all day. But the new plants, they are safer. They have a lot more advanced designs, like the ones that, you know, if you lose the electricity, the gravity will sort of keep water flowing to keep the fuel cooled and safe. So they're not as risky as some of the old school reactors that we saw in the 70s.
This new one doesn't even use water, right? It uses like molten salt.
Molten sodium, yeah. Well, it's got liquid sodium as the coolant instead of water, so that lets it get hotter, and that makes it more efficient. Plus, it has this storage tank of salt, so you can get extra power from it if you need to.
It's such a cool science, and I'm so glad that we have you covering it, Will. Thanks so much for coming on the program. Bloomberg's Will Wade talking to us about Bill Gates' ambitions for clean nuclear power, hopefully safe as well. For some of the sector price action that we're watching in the market this morning, just 22 minutes into the session, let's get over to Bloomberg's Abigail Doolittle. Abby, what do you see?
Well, we're looking at another small decline for the S&P 500 right now, on pace for a second down day in a row. Somewhat broad-based from a sector standpoint: real estate, communication services, utilities, healthcare, materials, tech, and discretionary all lower. Real estate down the most. Yields are popping higher today. TSLA, as you know. So that, of course, makes those stocks look less attractive given the real estate play plus the dividends. On the upside, energy, but up just a little bit, up 0.3%, and then 3 other sectors a little bit higher as well. Let's take a look at one sector that is underperforming, however, and that is biotech. The biotech index down for a second day in a row, the worst 2 days going back to for about a month or so. And it doesn't seem to be anything so macro, but there's lots of news at a micro level, including Takeda's epilepsy drug, their phase 3 trial didn't meet the primary endpoint, and some that stock and some other stocks down significantly, weighing on that biotech sector, Matt.
All right, Abigail, looking at the sectors for us. Coming up, Fed officials return to the public speaking circuit. Did they ever leave? The market moving events you need to be watching. That's next in our trading diary. This is Bloomberg.
If you listen carefully, you'll hear a rhythm in the markets. The markets compose their own tunes, and once you learn to listen for them, you'll catch yourself humming along.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Time now for the Trading Diary, what you need to be watching today and this week. We get Fed speak from Williams, Harker, and Cook later today. Tomorrow, we get U.S. retail sales, so watch EcoGo on their Bloomberg terminal. We get Eurozone and inflation data out of the Eurozone, so, pay more attention this week than you typically would, considering what we're seeing in rates and stocks over there. Wednesday is Juneteenth, so the markets will be closed, and hopefully you stay home and commemorate that in some way other than going to work. Thursday, we get the BOE rate decision. London Stock Exchange just overtook Paris as Europe's largest, so England continues to be important. This was the Countdown to the Open. I'm Matt Miller, and this is Bloomberg.
Liquidity is the lifeblood of an airline. We make very conservative decision making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well, because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
Good morning from our world headquarters in New York. I'm Menace Crennick.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
All right, we are 30 minutes into the U.S. trading day on this Monday, June 17th. Here are the top stories we're following. Bold up. Goldman boosts its year-end S&P 500 forecast for a third time to 5,600. Meanwhile, Evercore penciling in 6,000 for the benchmark, a real about face from the firm's previous bearish stance. Meanwhile, easing up on Europe, risks from France's political turmoil pushed Citi to downgrade European stocks to neutral from overweight. Instead, the bank upgraded U.S. stocks to overweight. And navigating the airlines with Brian Kelly, the founder of the Points Guy. We'll talk through the firm's report on the best U.S. airlines for 2024, with Delta nabbing the top spot for a 6th year in a row. I'm Katie Greifeld in New York. Welcome to Bloomberg Markets. You take a look at markets on this Monday morning. It's quiet. Again, we get some interesting economic data later on in the week, but on this Monday, you can see that the S&P 500 down by just a hair. We're talking about 0.1% lower for a benchmark that is very close to record highs. The same thing, you take a look at the NASDAQ 100, just slightly higher, 0.1% or so when it comes to big tech. You're getting a little bit more action when it comes to some of those chip names. The Philadelphia Semiconductor currently higher by about 0.2%. But even with this muted action, you have Wall Street bulls getting even more bullish on the S&P 500. You have Evercore and Goldman, just some of the latest to boost their calls. Joining me now is Bloomberg's Abigail Doolittle. So let's start with Goldman, because a third straight forecast boost for the S&P 500.
Yeah, this is really pretty interesting. So on Friday, they boosted their S&P 500 year-end target for 2024 to 5,600. It had been at 5,200. This is the third rise in recent history from Goldman Sachs, as you said. So clearly expressing a bullish view, keeping up with the index's appreciation. 5,600 from current levels, not a huge amount of potential appreciation, but they're saying the reason for the call is saying that earnings was less bad than expected, basically a solid earnings season, and that the price to earnings, the valuation metrics supports the idea that we could see stocks go higher from here. What's interesting, though, Katie, is if you take a look at earnings on a forward basis, we're looking at 22 times for the S&P 500. That's not necessarily cheap. That's really actually above the average. So this call is assuming that everything is going to go well.
Everything is going to go well. That, of course, is what's baked into that call, as you say. Let's also talk about Evercore. I thought this one was interesting as well. We're talking about 6,000. That would certainly be big, but this is a real about face from what we were seeing previously from Evercore.
Absolutely. So Julian Emmanuel has really made a big change here, saying 6,000. To your point, roughly 10% upside potential from current levels. His previous target, I think it was 47.50, sort of, so much lower. Lots of factors going into this, the economy, big tech, AI, that valuation. On the other hand, he does make the point that valuation, while he did raise his S&P 500 profit targets, he makes the point that it's below bubble territory. I don't know if that's the most reassuring. If we evaluate these two calls from a few different ways, fundamentals, clearly it's the economy. The Fed right now does seem to be steering toward a soft landing. On the other hand, if you take a look at the commodity space, there is some weakness for oil, for the grains, and some analysts in that space saying this does continue to point, it's a demand situation, continuing to point to the idea that there could be a recession coming up at some point. Again, valuation, I would argue that it's very healthy, if not rich. Technicals, Katie, on a monthly basis, if you were to look at the S&P 500, it's more than 100% above its 200-month moving average. That's a fancy way of saying that the bulls are well out over their skis. Now, if you go back to the GFC, only 67% above that. But if you go back to the tech bubble, 200% above. So we could go significantly higher, but it might be on borrowed time. The one last thing I would add, Katie, is a lot of the conversations that I'm having in another beat that I cover, real estate, folks are saying that the political uncertainty, not in Europe necessarily, but here in the U.S., that the election coming up, that there could be a lot of surprises there, and that they are seeing some activity sort of on the sidelines because of those concerns. We're not hearing about the risk. These calls really are assuming, again, everything goes just right.
All right, Abigail Doolittle, really appreciate that roundup. There's some really interesting sell-side action. Let's talk about these markets overall with Marianne Bartels. She is Sanctuary Wealth Chief Investment Strategist with me on set. Great to see you in person.
Great to see you in person as well.
Let's talk about all of this bullishness that we're seeing on the street. I look at the S&P 500 right now. We are just above 5,400. We're talking about 5,600 all the way to 6,000. What are you thinking when you think about just the broad index level for what's a reasonable level for year ends?
Well, we've been bullish. So we came into the year originally looking for 5,400 to 5,600, but I very quickly in the early part of this year raised my range for the S&P to 5,600 to 5,800 because we saw improvement in earnings and we saw the technicals improving. And I'm still very comfortable with that. If I do long-term technical projections, the market can go into a range of 6,000 to 7,000. But how I start feeling now, because I was so out of consensus, I feel now I'm in consensus land, and I don't like being part of consensus. But that doesn't mean I'm bearish on the markets. Earnings estimate revisions have been going up, and that's the most positive correlated indicator we have. Markets really truly move on earnings. But it does make me a little nervous that we're starting to get consensus. I'm also nervous because the VIX index, which measures volatility, has been around 12. That's pretty low. And we titled this year called the bucking bull. So we believe in the bull. We expected from time to time to see some bucking. So I wouldn't be surprised if you get a little bit of a buck, but a sign that you're in a strong market means when the market doesn't go down as much as you think.
So you're reluctantly in the consensus here. Let's talk about some of the risks, what that buck could actually look like, because there's been some chatter, of course, of maybe a summer pullback that's in the offing. You think about just how strong, of course, the outlook is right now. What are you thinking for the next couple of months?
So we've been in the camp that you're in the summer rally. The old adage, sell in May and go away, we kind of changed that. We said you want to buy in May, but sell before Labor Day. And I still think we have a chance of having a rally, but we do look for some bucking in the fall. is where we would see that. Where are some risks? I was actually really surprised. Moody's put on watch 6 banks, regional banks, for potential downgrades because of commercial real estate, and it got a blip on the radar screen and no one's talking about it. So if something was to emerge like that, you might be able to get a pullback in the markets, but we're not seeing anything that would take the market sustainably down.
Yeah, when you think about known unknowns, it feels like the commercial real estate market is definitely a place where there could be further shoes waiting to drop. But let's talk about technology and AI. There is so much good news and so much optimism baked into that corner of the market, of course, and that's really been propelling some of the benchmarks that we talk about all the time. Is there a potential for something to go wrong there when you think about just how strong the good news story is right now?
I don't see something wrong, and I do equate this to 1995, right? So we had the introduction of computers, we get the introduction of the internet, and when you look at the Dow, what really happened is you went vertical between 1995 and the peak in 2000. We always talk about 99 and 2000, but the rally actually began in 1995. But you had major bucking in 97 and 98 because you had a Thai baht crisis that took markets down almost 20%, but the year closed up over 20%. You had long-term capital in 1998. Markets went down internally 20%, but yet the market still closed on the plus side because the Fed eased up. So at any point in time, we can have an event that takes markets down, but if you're truly in a strong bull market, you recover very quickly. And I think we're in that. I think we're that 95, and we're going to go vertical out to 2029 and 2030. I've actually equated this to 1925 to the peak in 29 with the NASDAQ. The pattern to me looks very similar. So I'm very bullish AI. I'm very bullish technology. In fact, we titled our report this morning, June is busting out all over. That is an old song for you young people, but you got Apple finally breaking out after a consolidation for 3 years. Broadcom on its earnings, an announcement of their stock split 10-to-1. Broke out. We're getting breakouts in not just technology, but a company like Regeneron in biotech broke out. Microsoft has broken out. Oracle has broken out. Eli Lilly has broken out. So there's breakouts everywhere, and you don't get breakouts in a bear market.
Just really quickly, one area of the market that is not breaking out, just can't seem to get off the floor, is the small cap space. And it's interesting because you think about markets as a forward-looking animal. Okay, maybe we're 3 months out from the first rate cut. Why aren't the smaller sections of the market benefiting from that?
So yes, the valuation is there. There's a large component of small caps that don't have earnings, and that's a problem. But when you really look at the breakup, it has regional banks and it has energy. And I think the regional banks, because of commercial real estate, the concerns that you're going to continue to have consolidation due to regulation. And then you have energy, and energy is probably the best valued sector in the market. They have great balance sheets. Many of them give out great dividends, so it's great cash flow. But their earnings underperformed relative to the market. So they get this wind, and then the sale kind of goes down. So I don't think the makeup of small cap has leadership in it.
Right.
And secular bull and bear markets can last 15 to 20 years. And I think small cap remains in a secular bear and will not go into a bull market until we peak in the broader markets.
All right, Marianne, sit tight for just a couple minutes. Let's take a look at what's moving underneath these markets right now. We're going to do that with Bloomberg's Bailey Lipschultz. And Bailey, quiet overall, but there's a little bit of action under the hood.
Yeah, a little bit of action, starting with the activists, Katie. Want to start with Autodesk rallying 4 or 5%, depending on when you take a look. This coming after Starboard announced a stake of roughly $500 million, pushing for the company to delay its annual general meeting, basically saying they botched their handling of an accounting probe, which did not actually have a massive impact on the company's underlying business, but did cause a bit of concern and uncertainty from the investing community. The stock from that February 9th high in 2024 down about 15% before this letter, before this potential lawsuit from Starboard, again, urging the company to delay its annual general meeting so they can kind of, position some members to be potentially added to the board, just given, again, as they view it, the botched handling of that accounting probe.
So some boardroom drama there, definitely boosting the stock right now. And we were just talking about this next name with Marianne. Broadcom really breaking out.
Really breaking out again. You guys mentioned it ahead of that 10-for-1 stock split. Stock splits back in vogue for companies that have high sticker prices. As you can see right now, a really sharp move higher, 18.13 on that handle for AVGO. Katie, the stock has more than doubled in the last 12 months. Has really been absolutely rallying ahead of some of these excitement around the AI boom, excitement around what the potential growth can look like for the company. Really very much sitting comfortably in that.
Be harder. I don't think we have had a Wednesday closed on
What's going on, Bailey?
Opex either, brother. Our quarterly Opex, I don't think we have ever, dude.
But I say hopefully because
that is, I think you're right on that.
They had to postpone it because they had too much demand, an issue with the site that hosted that meeting. Obviously, all eyes have been on what's going on with GameStop, their ability to raise billions of dollars on the back of the latest Roaring Kitty rally. Company has about $4 billion in change in cash. So hopefully we'll be able to hear from Ryan Cohen. It'll be interesting to see if he lays out anything in terms of a strategic update, something that we haven't gotten really in the 3 years since he took an activist hold and really kind of pushed the members of management out, became the chief executive, and is really the brainchild behind GameStop.
Yeah, it would definitely be good to get some fundamental news around that name, TBD, of course. Bloomberg's Bailey Lipschultz, thank you so much. Now, coming up, protests erupt in France over the weekend to oppose Marine Le Pen's far-right party. City, on the heels of that, downgrades European equities over the political uncertainty. More next. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
This is Bloomberg.
Well, French markets stabilizing a bit after being roiled last week on that surprise election call. However, risks remain, prompting Citi to downgrade European stocks. Bloomberg's Paris bureau chief Alan Katz joins us now with more. So over the weekend, we heard from Marine Le Pen saying that she'd work with Emmanuel Macron should she prevail. And it seems like markets, at least, and investors seem to be taking her at her word.
Well, they certainly do for the moment, at least. As you said, markets have calmed down a lot today compared with how they did last week. And also, I think it's because people are taking a little bit of a breath to sort of say to themselves, oh, wait a minute, who's really going to take control? France has a very complicated two-step system in its vote, and so it's still quite hard to tell who is going to end up sort of in control of the legislative body when this is all said and done.
And what's the path forward here, for example, for Emmanuel Macron? I mean, how does he forge ahead from here?
Well, it's difficult. There's no question about that. And it's why a lot of people, including other heads of state, we reported out of the G7 over the weekend, have sort of asked why on earth he dissolved parliament. The path forward is that he has to try to forge a sort of centrist group with using the usual sort of fear of the far right that's worked in France as a bulwark against that for decades. Whether or not that sort of fear of the far right still exists in France it's very unlikely to be true, because when you look at the most recent election results, particularly the European elections that just happened, a third of French people voted for the far right. So it seems like there is no reticence or no hesitancy to do that anymore. And if you look at polls right now, another quarter of the French public is ready to vote for the far left. So that sort of centrist group that Macron is trying to rally, to bring together, to create that governing party that he's called for, it seems like it's going to be very, very hard for him to actually do that.
All right, Alan, really appreciate that reporting. I'm sure it's very busy over there. Our thanks to Bloomberg Paris Bureau Chief Alan Katz. And, of course, Marianne Bartels of Sanctuary Wealth still with us. And it's interesting. You saw Citi, of course, downgrading European stocks to neutral. You also had this advice from Mizuho saying that investors should stay out of it at the moment, even with the stabilization that you're seeing in French markets right now. How are you feeling about European markets when you think about the potential political risk spillover effect?
Well, markets never like uncertainty, which explains why the markets, particularly in France, have been correcting. But I don't think you should invest based on what you don't know yet, right? We don't know what's going to happen. And I'd rather see what happens and what are the policies before I made a decision about whether or not I would want to sell my European equities, because when you look for value around the world, Europe has had great value. They're not very expensive.
So we're looking now to the Fear and Greed Index, 39 out of 100, which indicates fear, while the Crypto Fear and Greed Index is 71 out of 100, which indicates greed. Keeping an eye on the VIX as well, it's currently up around 3% on the session and around 13.
But when I look around at the G7, the one market that we've liked all year is actually Japan. And we think Japan is in a new secular bull market. How we measure that is you've broken up above that 1980 high. You're
Protect
in a whole
your trade
new realm.
from macro
and we
headline
think
risk
they're benefiting from the weaknesses
Pro.
in China.
Now only $99
and we also
a year
think that
for
they
our
can
real-time
become major
service.
manufacturers. We think the yen, though, will stay very weak. I think the risk is it continues to depreciate. So for a U.S. investor, if you were to invest in Japan, we would be hedging the currency, and there's an ETF for that.
I was going to ask, I mean, you think about the volatility that we're seeing in the yen. Does that give you any pause? It sounds like you're finding ways to work around it.
If I look at the technicals, I can get it to 250, which is like 100 points higher, which is actually depreciating. It's in reverse. You don't want to see that happen over a short period of time, but if it gradually depreciates, it's not going to have a negative impact. The one group it does hurt is anybody in the country that wants to buy foreign goods.
Right.
It gets much more expensive, but it becomes an attractive market to invest in if you hedge the currency. But it's also maybe a place where you want to go on vacation.
There you go. Yeah, and of course, I'm sure that currency volatility keeping those currency traders busy. But I want to talk a little bit more about elections, because it's fascinating to see what's going on in Europe, what's going on in France right now, and then to think, okay, we have our own version coming up in just a couple of months in November. Is there anything to extrapolate out of what we're seeing when it comes to political risk volatility in European markets into the U.S. markets when we count down to our own presidential election?
My answer is no. What we have is something very unique. Normally, when you have a president or a potential candidate running against the current president, you really don't know their backdrop. In this case, Trump is a very known entity.
Yes.
So we've been in this situation before. So there's some known knowns. We don't know who is going to get elected. But what we've been telling clients, the election doesn't matter for this year, meaning earnings are on track. policies that have stimulated our economy through Biden's pieces of legislation. There's over $3 trillion that's been that has the potential to come into our economy. The Fed's already started to ease, and again, no one's talking about this. You talk about it for a blip, and then everybody stops. But on their balance sheet, they've slowed the amount of sales, which is actually a form of easing. And then we do have the potential. I've been saying I think the Fed, if the data supports it, which I think it will be able to cut interest rates 25 basis points in September. All of that is very bullish for risk assets. So I think this year we're fine. The question is who gets elected and what does that mean for next year?
All right, Marianne, great to speak with you. Really
Same
went
here.
around the world. Great to see you again. Our thanks, of course, to Marianne Bartels of Sanctuary Wealth. Now, still ahead, we're going to take a look at the companies making the most social buzz today in our Social Climber segment. Up next, this is Bloomberg.
Wonder what Jerry's doing now. Probably something awesome. Congrats, Jer. Wait, how do I plan for retirement?
Spend, save, and plan smarter with Erica from Bank of America.
The world needs ways to reduce carbon emissions,
especially for heavy industry. We're working on solutions in our own operations.
Like carbon capture and clean energy from hydrogen.
So who are we?
Believe it or not, ExxonMobil. And these solutions can help businesses like yours.
Or yours.
Or yours.
Heavy industry with low emissions. Let's deliver.
World of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything.
All right, it's time now for Social Climbers. A look at the stocks making waves on social media this morning. And first up, the U.S. Surgeon General is calling for a formal warning label to be added to social media sites, similar to those placed on cigarette cartons. Now, in an editorial in the New York Times, Vivek Murphy wrote that such a warning would, quote, regularly remind parents and adolescents that social media has not been proven safe for mental health. Any such move, of course, would need congressional approval. Next up, Adidas is investing allegations of bribery at its China's business. It comes after a whistleblower complaint accusing staff of receiving kickbacks from external service providers. The complaint also mentions a senior manager receiving millions of dollars in cash from suppliers, as well as physical items such as real estate. And finally, pull out the popcorn. Disney Pixar's Inside Out 2 reels in the viewers with the biggest box office opening weekend of the year. Now, the animated feature brought in $295 million globally. That is the biggest opening weekend ever for an animated film. It's welcome news, of course, for cinema chains, including AMC, who have been waiting for the next big hit since last year's Barbenheimer success. You can follow all the latest company buzz on TREN Go on your Bloomberg terminal. Meanwhile, take a quick look at markets at the moment, and again, it's quiet. The S&P 500, you could go ahead and call that unchanged, 0.1% lower. If you take a look at the NASDAQ 100, it's really a similar story, only about 0.1% higher. What's interesting is that volume is actually elevated relative to its 20-day average, but it hasn't exactly translated into big price moves. Now, coming up, the best airline in the U.S., according to the Points Guy. We'll speak to Brian Kelly next. This is Bloomberg.
I decided to acquire Indeed 12 years ago when I was 36. I couldn't speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big American company. But I could do it. Ages are just numbers. If you stay being very curious to run new things, you can keep doing that. So what we're trying to adjust is our company should be the praise to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So we believe that if we can have the work or the vision, people can be passionate, and which is aligned with all what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right.
So whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
Or other authorities.
Could face bigger challenges next.
It was going to keep
in World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Well, some good news for travelers at the start of summer, and that's that fares have moderated and airlines are using discounts to fill a surplus of seats. Bloomberg's Abigail Doolittle is taking a look at the travel industry.
Yeah, that certainly is good news for anybody who wants to get on a plane, and we were talking about that last week, Katie. In particular, those flights midweek, that's where that discounting is. But if we take a look at what's happening on planes, well, especially on long holiday weekends and weekends, the planes are pretty packed. We're looking at planes here in the U.S. Basically just below 3 million per day travel throughput. As for some of the stocks related to the travel industry, not surprisingly, given the discounting, given the number of people on planes, we're seeing some real strength for the passenger airline index overall, up a very healthy 9%. Royal Caribbean, people are also cruising, up 13%. Viking, this year's IPO, the thinking man's cruise line and river tours, up nearly 30%. And then hotels, not so shabby, up 6.2%. It's not just here in the U.S., though. If we take a look at what's happening between the U.S. to Western Europe, we are going to see that scheduled flights between these two areas at 140,000. That's the anticipated number of flights for this summer. That is essentially, it is actually a high since 2010. So people are out and about. It seems as though maybe that revenge travel, well, maybe it's picking up some steam this summer.
All right, Abigail Doolittle, thank you so much for that setup. And let's keep the conversation going with Brian Kelly. He is the founder of The Points Guy. He joins me now in studio. It's great to see you in person.
Thanks for having me, yeah.
So I want to get to your report about the best U.S. airlines, but let's actually talk about discounts. Are you seeing that among the airlines right now?
Absolutely. Last summer, if you wanted to go to Europe, you were spending $5,000 to $8,000 business class. Those frequent flyer mile tickets last summer were 400,000 or 500,000, 600,000 miles round trip. This summer, there's a phenomenon going on. I mean, Air France has 50,000 mile business class seats from a lot of the U.S. gateways all throughout the summer, even throughout the Olympics. So because of that increase in supply, we're actually seeing decent fares. I'm going to Ibiza in August, and it's $4,000 first class.
Wow.
Which is like half of what it was last summer. So, I'd always tell people, just before you buy a ticket, use Google Flights. Switching by even a single day can drop the price dramatically, and always double check to make sure that there's frequent flyer mile availability.
And so let's talk about why that's happening. I mean, is that just really the airlines reaching the end of their pricing powers, consumers getting a little fed up with prices and choosing not to travel, or are they adding more capacity, or what is actually behind that?
It's interesting. I think since the pandemic, business travel hasn't quite bounced back as much as leisure travel. So leisure travelers are now actually spending. So a decade ago, Delta was giving away 80% of the first class cabin to elite status upgrades and selling 20%. That's now inverted. So throughout the pandemic, when pricing was much lower, premium consumers got used to paying little by little. It's kind of like they were slowly boiling the water, and now people are used to getting that premium experience. So there are now more leisure passengers willing to pay the $4,000 or $5,000 than when they were trying to just fleece that business traveler whose company had to pay $12,000. So the pricing models have changed, and I do think overall it is good for consumers.
Yeah, and it's interesting, of course, to hear that adaptations that have to come with the pricing strategies. Let's talk about the report that you recently put out, though. Your best U.S. airlines for 2024, and Delta with another clean sweep for the sixth straight year, getting that top-performing spot. But what was interesting to me is that its lowest-performing area was affordability, which I would think would be a
big factor. At the Point Sky, everyone has their favorite airline, especially if you're in New York, like where you're closest to. But we wanted to look at the data sets. So we had 4 main categories, the biggest being reliability. That was 30% of the score, because at the end of the day, when you get a flight, you need to get to where you're going. And Delta is the most on-time airline in America, so it definitely helped there. Also in reliability, we looked at airlines that are now losing wheelchairs, which is a really terrible problem that keeps getting worse. So we ding those airlines that don't have great policies. And funny enough, Allegiant came in #1 in overall in reliability. Delta didn't win in any one of those 4 categories, but they were super strong across the board. But we also looked at loyalty, customer-friendly policies, like family seating, which Delta did do very well in. So we wanted to take a holistic approach, but with that Point Sky spin with the loyalty factored in.
And there you go. What's really stood out to me is that you take a look at some of the low-cost carriers, Spirit, Frontier, for example. They actually lost standing in this one.
They did, and I do think we also looked at route network, right? Because the Point Sky reader is global. They want lounges. So I do think our survey is somewhat, it's never going to have Spirit be #1, especially because loyalty is 25%. Those low-cost carriers do not have great loyalty programs. So I don't want to say they're not great airlines. They serve a population. They serve routes that are underserved. So they are good in certain ways. But when we look at the Point Sky, like, the global airlines that are serving passengers, we wanted to come up with our best recommendations. When people have an ability to choose at the same price, we kind of want to give people the data to show, well, you might want to choose a carrier that's more reliable.
We'll never say never. Something
you never say never. You're right.
Could happen, and Spirit could get
come
the
up
top
from behind.
spot.
I've seen crazier things.
Let's talk about some of the airlines that did make big gains, however, because it stood out to me. Alaska, for example, with the biggest gain, and of course, it feels like most of the recent coverage on Alaska has been dedicated to its January issue with that Boeing plane, but it seems like that actually hasn't dented its performance.
And these numbers are based on 2023 data, so that incident from 2024 wouldn't be reflected. But United, the biggest jump this year, or drop, was United from 2 to 3, and I do think last year they had their operational meltdown, but they also had some max groundings. And also the biggest issue, United's been hit the most on airplane deliveries. They just simply, every airline in the world now is dealing, both Boeing and Airbus are way behind on deliveries, which is impacting route expansion and reliability.
So there you go. So airlines still coping with those Boeing
growing
issues.
Pains, yeah.
Growing pains, there you have it. Let's talk about driving versus flying, though, because, of course, we're talking about airfares. We're talking about people paying up for those more premium experiences they've gotten used to. But when it comes to people actually getting in their car, it seems like that's also very popular.
Booming, yeah. Gas prices have leveled out, so it's, much cheaper. I mean, it depends, actually. But yeah, I mean, Americans are hitting the roads en masse. They're hitting the airports. And I do just want to say, driving, the traffic is crazy these days. So even though the TSA can handle that record number, 2.9 million, the roads can't. I nearly missed a flight to JFK. So for anyone at home watching, those travel procrastinators who try to get there, 1 hour prior, always check in advance, because even if you show up late, at least if you're checked in online, they might let you slip through. But, New York, LA, traffic I just recommend this summer at least add in an extra hour to get to the airport.
An extra hour, certainly.
Or just take the Blade helicopter,
Yeah, there you go. There's alternative methods for getting there. And when you think about sort of the psychology of the industry right now, of course, we heard Abigail mention revenge travel, and that certainly seemed to be fueling some of the numbers we were seeing for at least the past couple years. But where are we in the narrative? Is it safe to say we're firmly out of the pandemic mindset and what came after it and in a new era, or would you still phrase what we're seeing as sort of that revenge travel?
No, I definitely think we're post-revenge. We're post-COVID. The last several summers, I was on, shows like this just talking nonstop about the meltdowns, the staffing shortages, the baggage delays at Heathrow, images of 10,000 bags. The airlines have gotten their operations under order. It's somewhat smooth sailing. I do think we are, reaching a new normal where airfare, there is more capacity. The world's opening up. Asia is still not where it was. We're still, kind of growing there. Business travel's, a little bit lower, but that leisure travel is back. And I just think when you look at the demographics of all the younger generations who value experiences and travel over things, I think, the overall outlook for the travel industry is very bright.
And before I let you go, let's meditate a little bit longer when it comes to business travel. Like you said, it's not quite back. And is that just the new reality? Are we ever going to see those 2019 numbers when it comes to business travel?
Never say never. I do think, clearly Zoom and, companies are being smarter about spend, especially with the uneasy economic outlook, inflation. A lot of companies are getting hit for cost. So there still is that cost cutting that's going on at a lot of companies where they're saying, do we need to have this 400-person meeting in Vegas? Yes, it's a nice to have, but is it a really? So I do think it'll continue to grow, but TBD on if it ever kind of surpasses where it was.
All right, Brian Kelly, it's always great to see you. Really appreciate your time. Have a great week. That is Brian Kelly. He is the founder of The Points Guy. Let's get a check on these markets about an hour into the U.S. trading day. We're going to do that with Abigail Doolittle.
So we've just had the S&P 500 flip ever so slightly higher, actually onto. It was up fractionally just moments ago from a decline down slightly on Friday, and there it is going back down. But you can see a firmer decline for the Russell 2000. Small cap stocks continue to be under pressure, really underperforming over the recent time period. In terms of what's happening for the S&P 500, beneath the surface, a real battle between the big tech names. Apple up 1.7%, really trying to support last week's surprising, or at least surprising to me, breakout. We'll be taking a look at those charts later this week and probably in the weeks ahead in terms of what is actually going on there between the bulls and the bears. And then NVIDIA, a rare down day, down about 0.75%. This is the top point boost and the worst stock from a point standpoint for the S&P 500. And again, helping to explain why we're having this little tug of pull. As for the dollar, it's interesting. The dollar's been in a bit of a stealth rally, Katie. If we go into the Bloomberg terminal and take a look at the dollar here, we are going to see back in April, this was the year's high out of last year, a pretty solid rally. It's interesting because we have stocks higher with this. This is an ideal situation. It suggests a strong dollar signals a strong economy, and the stock market going along for the ride strong also. We are more used to, I would argue, a situation when the dollar is strong that can pressure risk assets. It's not happening right now, at least, but you can see the dollar going back up to the highs of this year. One question could be, if we do continue to see the dollar go higher from here, will that pressure risk assets? Stay tuned. As for what's behind the dollar strength, or it's hard to know, sort of a circular relationship here, but at least on the day, take a look at yields. The 2-year yield closer to 475, and right across the curve, we are seeing gains. So that, of course, supports the dollar going higher.
All right, Bloomberg's Abigail Doolittle, thank you so much. Now, coming up, we're going to take a look at demand for AI and what that spells for data centers. Wes Cummins, he is Applied Digital Chairman and CEO. He joins us next in today's Wall Street Week. This is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal.
The Deal. The Deal. That deal. The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
All right, it's time now for our daily Wall Street Week conversation, and the rise of AI is posing challenges to data centers. Applied Digital, which designs, develops, and operates data centers, is looking at how to adapt its infrastructure. Wes Cummins, he is the company's co-founder, chairman, and CEO. He joins us now alongside Wall Street Week's David Weston. And data centers, I mean, it's one of the hottest topics out there.
It really is. Every day we're talking about data centers somehow, some way. But Wes, thanks so much for joining us, because normally when Katie and I talk with people about data centers, it tends to be the commercial real estate side of it and investing in it, but you actually develop these things and actually install and operate them. So give us a sense of what's the big deal with data centers now that didn't exist before the rush to AI? We've had them around for some time, right?
Yeah, David, I think that the key to understand, the primary thing to understand is the difference in the compute workload that's going into data centers now versus what it was in the past. So in the past, we were building data centers that were in population centers that were providing ultra-low latency communications so that we could get YouTube, so that we could get Netflix, so we could get TikTok, right? So we could get all of our things that have been driven mostly by video applications. Now, as we're moving from applications that need ultra-low latency communications outside the data center to applications that need massive amounts of compute. So think of it, doing large math problems, algorithms. This is what AI is doing inside the data center. Compute equals power. And then inside the data centers, you need a lot of compute close together. So you need really high power density. And so these are kind of some weird numbers, but historically data centers were, let's call it 7 kilowatts for an entire rack of computing. An NVIDIA H100 server, one by itself takes 10 kilowatts. And then you need to stack all of these together. So you have a massive amount of power consumption that needs to be close together. The latency inside the data center now versus outside needs to be ultra low. And so you have to build a completely different style of data center. You need large amounts of power in the same location. And so that's what we're doing. We find large amounts of power, typically different locations than you would do city centers. So it's no longer New York or Virginia or Dallas or Los Angeles. We're building in different locations where we use a lot of renewable energy that have these hundreds of megawatts, if not gigawatt of power, so that you can, run these workloads, because they're just very different style workloads versus what we're used to.
Right. And when it comes to that adaptation process, really sort of converting those existing data centers to be able to handle the AI workload that people are trying to do, I mean, how long of a process is that? How long is that timeline?
So I'm a big believer that you're better doing greenfield, in that you just build an entirely new style of data center versus trying to retrofit. Cooling is different. Again, the power density is significantly different. So there's a big issue. So the number one issue right now is finding power. Where's near-term power? We have a very unique way of finding power, which is we find things that are called stranded power, and we typically use a lot of renewable energy that's more in the middle of the country. So number one is power, and then number two is supply chain. So this is electrical components. This is, it's transformers, it's chillers, it's high voltage switchgear. So the supply chain, because of the demand for this, has become really stretched as well. So number one is power, and number two is supply chain.
So Wes, are you building your own power? I mean, you're building those wind farms or solar or even nuclear for that matter, or are you tapping into some other part of the grid? And similarly on the supply chain side, how long is the lag time on all this? It sounds like it's going to take an awful lot of time to build that power and also come up with all that supply chain.
So right now we're not building the power. That's something for the future for us. So there's a unique setup in North America that we take advantage of. What I call it is stranded power. So there's power that is generated and not used. And I know a lot of people will think that if you can generate an electron anywhere in the U.S., it can be used anywhere else in the U.S. And that's just not the case. You need the transmission infrastructure to actually be able to do that. So we find places where, for Ellendale, North Dakota, for example, there's a massive amount of wind power that feeds into a substation, and oftentimes they have to curtail the wind farms because there's not enough demand, there's not enough load to use the power that's generated. So we go to that location, and we have several of these locations where we use power that's currently not being used. Now, to go to the other part of your question is for new power. So you can build power gen on renewables over, let's call it a 24, maybe 36-month time frame. The bigger issue is transmission. So transmission to transmit that power that typically is built, somewhere in the middle of the country to end users, that's more of a 10 to 13-year process. And so we're kind of shortcutting that by taking these workloads directly to the point of generation.
And I want to talk about the competitive landscape here, because you think about AI, and it's just really made its way into every part of the market. It seems like every investor in every asset class is trying to figure out what's the AI narrative in their industry. When you think about your own industry and data centers right now, how fierce is the competition?
It's an interesting time for sure. So if you go back a year ago, everyone was trying to figure out on the data center side what's happening in this market, right? Why is all of this demand? Why for the high power density? Now, in this industry, we figured it out, and now it's trying to make this solution, because again, getting the amount of power that's needed and operating these style of data centers is extremely difficult. And so think of on the data center side, we're the picks and shovels. This is digital infrastructure. This is the digital infrastructure that was built out to run everything that everyone's used to running on their phone or on their TV at home, and now it has to be rebuilt. It's not a replacement, by the way. This is an add-on, but rebuilt for compute and AI workloads. So we're the building blocks. We're the infrastructure that runs all the AI that everyone wants to do. And we're talking about everyone knows ChatGPT, but if we're doing anything in video, in visual, anything generative AI runs on this infrastructure, and a massive amount of this infrastructure needs to be built. When Jensen at NVIDIA talks about AI factories, so what we've done, we actually designed our data center in partnership with NVIDIA. We worked with their team to build the style of data center that we're doing, because this is the issue in the data center industry, is it's just a very different style from data centers that were done in the past, but we're running all AI workloads, and these are really split between training and inference, are the terms that are used in AI, but the entire industry is, I would call it, scrambling to build the amount of infrastructure that's needed to house the compute to run these applications.
Well, so it wasn't that long ago we hadn't even heard about all these data centers. What's going to prevent obsolescence?
So that's a great question. So when we build our facilities, we think about what we call future proofing, right? So we think the power density goes higher, cooling. But I think, the last 20, 30 years were, again, really driven by applications that required, I call it comms, high-speed communications. And as we go for the next 20 or 30 years, applications are really going to be driven by compute. And that's what AI is. And so we're, working to future-proof that. And by the way, the older style data centers, those are not obsolete. We still need all of that capacity for the applications that we continue to use. This is absolutely a complete add-on to what's been done in the past. And so, but trying to not be obsolete is making sure that you're future-proofing your facilities as much as possible with power density, with cooling. We're trying to run it at an extremely high efficiency so that we lower our carbon footprint. We build where there are renewable, we mostly use renewable resources, but those are the things you try to do. Obviously, not being obsolete in the world is one of the keys here.
All right, future-proofing, that's a good place to leave it. Really enjoyed this conversation. Our thanks to Wes Cummins. He is Applied Digital co-founder, chairman, and CEO. And David, who else do we have coming up?
Tomorrow we're going to make a big turn. We're going to talk about carried interest with Ludovic Philippou, who is a professor at Oxford, has a new study out, and it will get your attention, Katie, how much money private equity is making out of that special tax treatment called carried interest.
Yeah, I'm sure there are some big numbers involved there. Looking forward to that conversation. Our thanks, of course, to David Weston. This is Bloomberg.
Just because Workday makes you great at finance and HR does not make you a rock star.
Tim, you are a rock star.
Excuse me, Tim, do you have a platinum record?
Technically, no.
If you listen carefully, you'll hear a rhythm in the markets. The markets compose their own tunes, and once you learn to listen for them, you'll catch yourself humming along.
Morning from our world headquarters in New York, I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
All right, let's take a look at these equity markets. We are about 90 minutes into this Monday, and boy, it is boring. You take a look at the S&P 500, nothing going on, unchanged right now. Maybe we'll get some more action when we get that retail sales data. Of course, a very important insight into the consumer. A little bit more to talk about if you take a look at the NASDAQ 100. That's your leader today with just about 0.1% gain. Big tech breaking out on a relative basis, at least. And interesting, actually, the Philadelphia Semiconductor Index, not doing too much, down about 0.2%. Of course, that has been the hot area in the market, but not so much today. Now coming up, we have Bloomberg Technology with Caroline Hyde and Ed Ludlow. But that does it for Bloomberg Markets. I'm Katie Greifeld, and this is Bloomberg.
River dolphins are very good ambassadors of the rivers. I'm Fernando Trujillo. I'm the scientific director of Omacha Foundation. I'm a National Geographic explorer. and I work with pink river dolphins in the Amazon. Dolphins are very clear indicator of the health of the river. So we are trying to evaluate their health. Already we have covered 52,000 kilometers of rivers. And we have trained more than 500 people. We can learn about the whole river system from these wonderful mammals. I want to connect all the planet with the Amazon.
The Amazon is a vast and highly interconnected ecosystem. 3 million plant and animal species and 40 million people live within it. A key part to this connectivity lies in the water that travels from the top of the Andes Mountains down to the river mouth at the Atlantic Ocean. To investigate this connectivity further, Rolex and National Geographic have launched the Perpetual Planet Amazon Expedition. I'm joining 7 teams of explorers working throughout the river basin, an area threatened by climate change, deforestation, and biodiversity loss. They'll be gathering data, conducting scientific research, and gaining local insight on this crucial region. Their work is shedding light on how best to protect the river basin so that it continues to sustain life well into the future.
Sometimes investing can feel like you're going at it alone, especially when it comes to adding crypto to your portfolio. But it doesn't have to be that way. As the world's largest crypto asset manager, you'll find a lot of people holding Grayscale funds, which means you're investing in good company. Grayscale, crypto investing begins here.
Right after a vacation than I am before vacation.
Where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
So according to an IFOP poll, the Macron group has an 18% advantage, whereas the Le Pen party has a 33%, according to the IFOP poll for France.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York. Ed Ludlow is off. This is Bloomberg Technology. Full market coverage ahead as the Magnificent Seven see a momentum rally like never
Do you
before.
want to stay up to date
Plus,
with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of $1 month. That's over 92%.
But first, let's check in on those markets because we are seeing some pause, shall we say. We are looking at what the Federal Reserve comments are going to be this week after the policy. Yes, last week, of course, signaled maybe, are we going to get the rate cuts that the market is anticipating? More notably, is the political tension still happening over in Europe? 10-year yield just actually selling off significantly after there was this push for havens last week. That calms a little. Why does it calm? Because Marine Le Pen over in France, right-wing, of course, person that we could see become prime minister if indeed we do see this, well, this legislative vote go her direction. She's trying to calm the market, trying to calm, well, the broader French population to say she would be still backing institutions and she'd support Macron if she did indeed become prime minister while he was president. CAC 40 sees some relief. We're up 0.9%. Move on and see what's happening on the individual movers today because we are seeing a little bit of movement on what's happening in the chip sector. Now, the stocks was previously at a record high. We dial back from that as NVDA indeed sinks. $130 is where we currently trade. We're getting some big calls from some big investors and analysts still saying, look, we could go as high as $160. So Susquehanna pointing us in that direction, but we just perhaps take profits as we hit a new record high. Micron, though, up another 2% as we see analysts upgrade their price target on this particular stock. Broadcom also winning as we look towards that stock split. They follow hot on the heels of NVIDIA. 1,798 is where we trade. But look, we have seen these particular chip names do phenomenally well over the course of this year. And many are saying, look, this is momentum strategy that's winning. Basically, what do? You buy the winners and you sell the laggards. It's always kind of a powerful force in the markets, but right now, it has gone a complete tear on a scale that we've never seen before. We want to break it all down with Bloomberg's Isabel Lee. And there's a great bit of reporting coming from Bloomberg across our outlets, really talking about how much this momentum trade can stick, because it's working.
Yes, it's definitely working on a scale never seen before. The relative performance has surpassed that of the dot-com bubble, which was in 2000, so it's around 24 years. And it's really simple. You buy what's winning, you sell what's losing. But the question is, will it last? And momentum has a tendency to go on and on until something stops it. Worth noting, though, that this stretch has been going on for quite a while, longer than usual. But what's concerning is how the driving force is really mostly valuations. It's not anything about great momentum about earnings. So this is why some people are worried that it might buckle anytime now. But then just with anything, this is the winning trade. There will always be losing trade, and the losing one is value. But of course, if you're invested in momentum and if you're tracking momentum, it's a great year so far. In the strategies that Bloomberg tracks, there are 13, and top of the list, momentum, 16%.
It's interesting that you say some of the worry is about whether it's on valuation, whether it's on earnings. Now, some would say NVIDIA's earnings increases do vindicate the valuation uptick, but is it just the breadth? Is it some of the other names that are getting swept in on this that are moving more on valuation than actual earnings guidance?
So that's fair. I mean, I think NVIDIA, every time I ask about NVIDIA, I do get bulls and bears. So it's like there's even no consensus. But the thing about this AI rally is the big winners are getting bigger, and obviously everyone is left behind. I mean, you take a look at Apple. Apple last week saw one of its best week in years just because of one announcement. And the thing is, it's interesting that these announcements wouldn't even roll out in the near future. So how will we test whether they will work? But then for the longest time, Microsoft's lead against Apple seemed far. But now Apple is inching towards Microsoft just because of that one announcement of an AI chat GPT-like integration, basically to compete with Microsoft. So that's the thing. The players are so narrow, and whether the momentum trade will last remains to be seen. Is AI really going to be a transformative technology that will drive profits and productivity, or is it just going to give some companies a handful of cash for the meantime?
Well, I'm sure the companies are liking the handful of the cash for the time being, and indeed the investors the bit on the winners. Isabel Lee breaking it all down. Let's talk about what could be the catalyst that puts it to an end. Pleased to welcome Megan Horniman to the show, Verdant's Capital Advisors CIO. And to that point, this has been a runaway trade, the momentum trade. What could stop it?
So, you mentioned it's a momentum trade. So to be able to figure out exactly what will stop it, it's basically impossible. But we think that there's a couple things to keep in mind. The interest rates right now, we did get that flight to quality last week, so yields went down. Markets like that. But then take a look at what's happening today. Yields are backing up. That can take some of this momentum out of this rally, because what's going to happen is people will just start looking at valuations. And with the uncertainty around where interest rates are going, we obviously know that eventually the Fed will cut rates. We just don't know when. And when you're looking at long-term yields, when you're looking at the Treasury market, the dynamics in the Treasury market are just for higher yields because we have so much issuance that's out there. And this is something we think could take some wind out of this sail here. It's just it can be a valuation correction.
Really interesting that you're looking at what's happening in terms of supply side with treasuries. Well, what about the inflation picture? What have you been taking from the PPI, the CPI, and whether or not we are cooling or whether actually we're still just too high for too long?
It is cooling. The data we got last week was good news, but let's keep in mind it was 1 month's data, and we still are a far way away from where the Fed wants to be. And when you actually dig into some of those reports, this is a goods deflation story. This isn't a service deflation story. In fact, we're still looking at service prices that are quite sticky, and housing as well is another thing that's sticky. These are things that the Fed is going to be taking into consideration. This is why we think, and we kind of lean in the camp, higher for a little bit longer. We might get something in December, but we need a lot more information before we can say that the Fed can do that.
And just add in, as you say, that flight to quality, that volatility that we see because of political risk over in France, of all places. I mean, how much, Megan, do you have to take in the global geopolitical risks right now?
I think it's something we have to consider. When you're coming into this year, we knew we had a lot of elections and political risks globally. And let's keep in mind, we still haven't gotten to November here in the U.S. So there's a lot from a political standpoint through this summer that can keep the markets on edge. And it just tends to be when there's so much risk out there, but the markets are so high, what's the upside risk from here? That's what I don't see. I see a lot more downside risks from here than I do upside catalysts.
So what to do as a chief investment officer of Verdant's Capital Advisor? I mean, where do you see, is it protecting your downside, or is it hedging, or is it more sort of reallocating in some way?
So at this point, there's, hold cash. Keep a good amount of dry powder that you can take advantage of opportunities. That's what we've been doing. Cash isn't hurting you right now. You're getting 5% or more. Eventually, that won't be the case. But for now, you have the cash to be able to look for opportunities. And there will be opportunities. Right now, if you look at the market, parts of the market that are really unloved, look at small and mid-cap stocks. Now, the economy starts to roll over. They're going to struggle a bit, but that's the time to take advantage, because that's where you see the best upside as we get out of this, an economic slowdown. And they're priced so on a relative basis versus large cap, the cheapest we've ever seen.
When you're thinking of a technology show such as ours, and many want to understand the realities, you need to be diversified, but they also want to understand where the opportunities are outside of Mag 7 in technology. Like, is there a play for tech or indeed AI in small and medium-sized companies?
So, the AI is here with us. It's been here, but it's just only going to evolve going forward. The one thing when you think about AI is it's not just technology, and I know it's a technology show, so I apologize, but let's look at other areas of the market that will benefit from AI. So what are the companies and sectors that are going to benefit from implementing AI? That we can see that in their earnings. Those are some of the things that we're looking at. Industrials is an idea. Some consumer stocks, I think it's right
Oil
now
prices extend gains. The U.S. crude futures rise by $1 to a session high of $79.49 a barrel.
That are going to benefit from the use of AI going forward.
What about energy? I mean, there's a great story, very well read, all about the focus of Bill Gates at the moment, perhaps on nuclear energy. And I'm wondering whether you're seeing energy and some of the infrastructure needed for this new AI paradigm shift as a place to bet.
Yeah, absolutely. That is an area. Look at what utilities have been doing as well because of the use for it. But the infrastructure side, we don't have yet to be able to support what this AI is going to look like in the next decade. So we do need, from an infrastructure standpoint, those are some areas that we'll look at as well as we see some broader weakness in this market.
It's great to get a take that encapsulates a lot of tech, but also how to diversify outside and around it. Megan Honeman, we really appreciate it. Verdant's Capital Advisors, stay well. Meanwhile, coming up, look, there's been a meme frenzy, and GameStop's annual meeting actually kicks off today after it's postponed due to technical issues, due to that meme demand last week. For details, that's coming up ahead. Meanwhile, look, keep an eye on shares of TSMC. We look at what happens in terms of trading of ADRs, which actually there is a trade here. There is a long-favored arbitrage strategy where you buy TSMC over in Taipei and you short the US ADRs. American Depository receipts listed here, but it's becoming painful because basically the premium of the US is pushing ever higher. Will we see it turn around? This is Bloomberg Technology.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg.
NATO Stoltenberg says more than 20 NATO allies will spend at least 2% of GDP on defense this year.
Let's talk EVs. Ferrari will release its first fully electric model next year, but is open to a range of technologies. It's all according to the company's CEO. Now, younger buyers favour electric, but established customers, well, they're hesitant to give up the sports car's trademark.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
And let's talk a little bit more along the electric vehicle route, because Tesla has gotten approval to test its advanced driver assistance system over on Shanghai streets. Bloomberg's Craig Trudell joins us now. And how important is this for FSD? How important is this for the Tesla business model?
It's an incremental step, and I do think that there's some potential for what Tesla markets as full self-driving to be a more meaningful contributor to their business in China, which they could really use at the moment. But what we don't know is just how long it's going to take them to be able to offer this more widely. Even this incremental step that we're reporting on today really just applies to the city of Shanghai and potentially also Hangzhou, another city. And so we're not necessarily seeing China take the same sort of hands-off approach that we've seen in the US, where they've been able to offer FSD nationwide, and it wasn't all that much trouble for them to make this available to consumers. On the other hand, in China, they're really going to have to sort of, in piecemeal fashion, hit the sort of tick the boxes that they need to with regulators in order for consumers to be able to activate this.
And it feels as though Musk has realized that he needed these green lights coming from regulators. He made whistle-stop tours to Beijing, and actually, therefore, having to play alongside all the other Chinese EV makers.
Yeah, that's right. And this has been, months in the making, even before that recent trip to Beijing that you mentioned. This is a case of Tesla having, offered the ability to buy this if you're a customer in China, but, not being able to actually activate it and be deployed the sort of
Fed bids for 3-month bills total $339.7 million, and Fed bids for 6-month bills also totaling $339.7 million.
Depending on how much sort of capability it's able to offer, because this is all going to be up to the regulators. And again, I think they're going to, the likelihood that they're going to be as permissive as the U.S. has been, where Washington has taken this view that we don't want to stand in the way. We want to offer, driver assistance systems, plenty of leash to try and, offer, the sort of safety benefits without, getting in the way. That still remains very much an open question.
Craig Trudell, we thank you so much. All things Tesla. Now, Tesla has a pretty loyal shareholder following. So too does GameStop. So loyal that they're going to have to reschedule their annual meeting. It kicks off today, 12:30 p.m. local here in New York, Eastern time. It was delayed last time because of technical issues. We're going to break down why with Bailey Lipschultz. And it was because too many people wanted to log on all at the same time, right?
Too many people trying to get in. Computershare saying that they had to reschedule it from Thursday afternoon, again, to your point, to 12:30 today. We had to resort to Twitch streams, YouTube streams, X streams, which was interesting because they were
NATO Stoltenberg says allies need to impose a cost on China if it does not change the course on support for Russia.
So people trying to find a way to stream it, so fingers crossed it goes off without any glitches today.
And why is there so much demand? I mean, who are we going to be hearing from? What are we going to be knowing?
No one knows. So when you look at last year's AGM, when Ryan Cohen, it was the first time as chairman leading this call, he spoke for about 90 seconds. The entire call.
90 seconds.
90 seconds.
Okay,
the entire call lasted about 15 from start to finish. So no one knows what's going to happen. There's so much interest in whether
the S&P extending gains, currently up 0.22% on the session.
The company did raise about $3 billion through sales of new shares over the last 2 months. So will they address the cash haul that they have now, about $4 billion in the balance sheet? Will they address the strategy? No one really knows, and I think that's part of the reason that people have to tune in, because if Ryan Cohen appears, how long does he speak? Does someone else make a guest appearance, or is it strictly business from some of the lawyers?
Now, having tuned into Keith Gill's own YouTube channel the other week, it doesn't seem like he knows much about the strategy of GameStop either, but he does seem to be moving around his holdings. He's changing his options into actual share ownership. That seemed to be pushing up the stock recently.
Yeah, there was some excitement around that. So we saw about a week and a half ago, he posted a screenshot on Reddit, 5 million share stake, 120,000 call options. A couple days later, turned out he exited that call positions and reported north of 9 million shares. So that makes him a top 4 holder if we take it at face value, and is on paper worth, the last time he posted, about $262 million. So where did he get the cash from? How rich is he? A lot of questions and uncertainty around that he never addressed on his stream, but nonetheless, again, if you take it at face value, what he posted on Reddit, top 4 holder from a retail shareholder who back in 2020 was preaching GameStop, the Ryan Cohen vision, and short squeezes.
And let's just focus for a minute on Ryan Cohen, because if you haven't been a complete GameStop fanatic of the story or into the stock, why do we care so much about this individual?
Co-founder of Chewy, so a lot of people bet against that, said they would be Pets.com 2.0. Very successful sale to PetSmart, ultimately went public when he was no longer associated with the company, made a pretty nice fortune from that. He took an activist stake back in 2020 in GameStop, then pushed and really helped trigger alongside Keith Gill in early 2021, getting seats on the board, pushing for changes, ultimately ousting pretty much the entire management team, and now is the chairman, CEO, and president of the company. And really the whole belief in GameStop with Keith Gill's thesis is that Ryan Cohen will be able to turn the company from a brick and mortar company that has shown slowing sales, has shown a need to close some of those stores and completely revamp the business. The question is, what does that look like? How do we get there? No one really knows, but that's the whole kind of group mentality behind the GameStop bulls, the retail investors who really like the stock, is that Ryan Cohen knows. He won't tell us, but at some point this is going to end up working out, and that's really been why we've seen such a wild ride over the last 3 years. And you have to kind of, at some point, tip your hat, though, because Ryan Cohen in RC Ventures owns about 8.5% of the company, so he has put his money where his mouth is.
And he's put some money in the balance sheet of GameStop too, and that's Citron, for example, has just exited at short. Always great to get Bailey Lipshorts on all of the backstory when it comes to GameStop. Tune in 12:30 local. Meanwhile, coming up, Google DeepMind. Well, it shifts from a research lab to an AI product factory, or at least it tries to. We're going to talk about the move and if it's undermining its long-running strength in foundational research. That's next. Meanwhile, just keep an eye on some of these chip stocks, because AMD has been under pressure all
now
day.
at the bottom of the hour. The US is due to sell $70 billion in 3 and 6 month bills. 3-month bill prior high yield was 5.25%, with a prior bid to cover of 2.75. The 6-month bills, the prior high yield was 5.165%, and the prior bid to cover was 3.09.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. The top names in business are on Bloomberg.
You need to have an AI game plan. We used to say that every company needs to think about becoming a software company. Now we say that every company needs to become an intelligent software company.
Context changes everything. The top names in business are on Bloomberg.
The valuation environment has fundamentally changed. Private equity sponsors are just going to have to hold companies longer, are going to need to take on equity to get some refinancings done, and returns are going to be lower over the next few years.
If you go back all the way to 2007, we used to have a high interest rate environment. We used to have high prices, and if you look at those vintages, even the GFC vintages have done actually pretty well in the end.
Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Rain World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley.
Check 1 2. Oh, check 1 2. Mic check. I got my hat on this morning. I might just leave it on. Check 1 2. Bloomberg. Check that out. Going up, baby. Buy the dip. Did you buy the dip this morning? One quick second here. Just going to get ready. What's going on out there? Where's that stuff? Old timey break man. Be right back. Nope. Oh, wait a minute. Nope. Chat box. Move that over. Sorry, I got a hat on today. I was outside for a minute in the sun. How are y'all doing out there? Chat box. Nope. No. Ah, fuck. Whenever I turn the chat box on and off. Oh, no. It like deletes everything. All right. It's what it is. How was your weekend out there? Did you guys all have a great weekend? Turn this up right now. Yeah, I had a... You're expecting Megadeth into the end of the month? You know, there's a few things to discuss this morning about that Megadeth into the end of the month. There's someone mentioned it earlier in the chat. I was reading the chat earlier, and they were talking about the monkey wrench of a market closure on Opex, and more specifically, not Opex, quarterly Opex. It's not the norm.
At 11:30,
like the whole band and everything.
The US sells $70 billion in 3-month bills. Prior high yield 5.25%, and a prior bid.
We normally I would expect us to sell down. I'll show you guys some. I'll show you guys this morning some. I gotta get this thing off my head. Hold on a second here. So apologize. I want to lean back in my chair. On Opex, there is a monkey wrench. We've got Vixpiration coming up too, I think, on Tuesday. Vixpiration Tuesday, so they murder the VIX likely here, right? And then maybe a pullback. So like you blast off. Let me see if I can show this. Maybe we blast off into the JPM collar and then pull back to where they want to park it into end of month. So like slam into that collar and then do the pullback. That's normally what I would expect. This looks like they're murdering the VIX already, doesn't it? Trading 544. We just missed. Take a look here. Just missed all-time highs here just a moment ago. So maybe get a pullback and then we break above it from here. So trading all-time highs once again, basically. We're just a few ticks below it. I think the high tick here, 544.03-ish. 544.12 is all-time highs, right? On SPY, at least. Collar's at 50. Sorry, it's at a 50. Top of my head, it's 55.65. If I got that right or wrong, I'm not sure. We'll check. We'll take a look at it. I think it's 55.65 off the top of my head. Hold on a second here. I got some wonkiness going on. Well, yeah, that's so it's like I got to tell you guys a few things. July is usually an up month. It's a pretty good month. There's usually two. Alexa, turn off. There's usually two good runs in July. Suppressed vol could be here for a while. That's true too. And you guys saw all the calls over the weekend for 6,000. Other bears calling for 5,600 as the year high. So everybody's coming around to the 6,000 thing. So I've got, number one, I've gone over the DivX trade in market briefs, but I will go over it today, and I'll relate it to Opex and quarterly Opex, end of month expectations. Now, the one thing I got to say about this Opex is, number one, Scott had to cancel for today. He's very busy. He's very busy, but most people I've been talking, we got a bunch of stuff to go through. Most traders that I've spoken to are on vacation. They've taken the Father's Day weekend. They're taking Juneteenth. They're all off golfing. Everybody's out golfing and at the beach. Not just one or two. Every trader I speak to that I trust, the pros, right? The guys that are actually licensed in this business, they're all on vacation right now. But he did have to cancel today due to where he was on vacation. He's one of them. And so he did take the day off today, or he took the whole weekend off to go do a bunch of stuff. I'm not going to tell you what he's doing and where he's at, but his take was the same as mine. If we didn't have Juneteenth closure on Wednesday, it would probably be easier to give a read as to what to expect in this quarterly Opex. This quarterly Opex looks like a melt up, right? We talked about that on Friday, that we should just melt into the end of this quarter. Is there a chance of a window of weakness? Yes. There is one after VIX. Even on VIXpiration, there's a window of weakness, and then next week there's a window of weakness as well. But we're running into July, which should be like a two decent-sized prints in July. So we'll take a look at a few things today, this morning. We're going to look at the quarterly Opex trade. It should happen on Thursday, but with Wednesday being closed, I don't know if it happens this year, or at least this quarter. But we'll take a look at the historical examples of it. We're going to take a look at some seasonality stuff too. Maybe that can lend a little bit of insight. We'll take a look at the collar as well. It's like the thing about the collar is, sometimes it's a magnet, sometimes it repels price. Sometimes when you get so close to it, it's like a mosquito to the bug zapper, right? You're just so close there, it becomes self-fulfilling prophecy. You know what I mean? Like, seriously, when you get that close, it's like, we're likely going to go there. So we'll take a look at all that kind of stuff here this morning. It's still morning. Yeah, it's 11:30 right now. So I'm a little bit early this morning. What else? I had hopefully you guys all had a great weekend. I had a great weekend. It's Father's Day. What happened to me this weekend? I got run around. That's the one thing about Father's Day. It should be a 3-day weekend. Should be. I got like run around this weekend. Go here, go there, see these guys. It's like I gotta talk to my dad, gotta talk to my father-in-law, I gotta talk to my buddies. Right on Saturday night, they wanted to go watch the fights. These are all the dads that I know. So we all got together, late night because I have to do family stuff. Or I got other stuff to tell you. So like Addie said, get a pool. So I ordered a pool. Then I couldn't get guys to come over to do the work over the weekend to prep for that. So I did that work myself. Saturday morning, I rented a, I don't know what they're called, like a bobcat thing. And I ordered 10 yards of mason sand. They delivered it. They had it at my house at dark 30 in the morning. So I went and picked up a Kubota or whatever. I don't know what the fuck they are, and I spread 10 yards of sand in my yard. It was a nightmare. It was a nightmare. But I did it, got it done. And then my buddies all wanted to get together Saturday night. These are all dads, right? So we get together to watch boxing. And it was hilarious because the youngest dad in the group passed out in a chair, passed out with his head backwards, snoring. He's got 2 young children. And, it's like he was running all week long and he's taking care of kids. And he reminded me of my wife and I when we had young children. When you have young children, they just run you. Kids just need attention 24 hours a day. And today's day and world, you have to work. And like my children cost me more, I think, today, than they did when they were younger. But maybe I just don't recall. But like child care costs are insane. They've always been insane. Forget COVID. Even before COVID, they got out of control. So this guy's running ragged and wants to hang out with the boys, and there he goes, sleeping. It's like I made it to the finish line. Cap, I'm sleeping. So we did that late night. We didn't get done with that until 1, 2 in the morning, and then Sunday morning, it's like get up again 6:30 in the morning. Get everybody awake. We got to go here. We got to go there. We went to brunch Sunday morning for Father's Day. Nobody was there, nice and quiet. It's not like Mother's Day. And Father's Day is a weird thing. Father's Day is a weird fucking thing. It's not Mother's Day. Mother's Day, it's like celebrate your mom. But I did celebrate. It was kind of funny. I dressed up in the morning. And And then I took off my nice clothes. And I put on an old pair of cargo shorts. They look like dad shorts. I don't wear that stuff. But I did for that day, right? So I put on these cargo shorts and a T-shirt that I've worn to do work and construction and stuff. And I put on Tevas with the straps on them. So I looked the role. I looked like a middle-aged dad. But my wife and children dressed up. They dressed to the nines. They had like their summer Sunday dresses on. And it was badass because I got to walk around in downtown on a Sunday morning. The cool wind is blowing. The warm sun is out. It was a perfect morning. And I looked like shit, and they looked great. And it was like it's like I had my Lamborghinis out, My Ferraris were out that morning. They were all dressed up, polished up. They'd all been detailed, and it was just epic. And I'm walking down the street, and there's like other fathers walking with their families, and we're giving the nod, like, yep, yeah, I got you, brother. Then we did it. So that was really cool. And what else? Then we went out and there was one other weird thing about Father's Day. Father's Day is a weird thing. I didn't know this. We went to the water, right? And all the freaks came out. Like there was a lot of weird people out for Father's Day. It's not the same crowd as Mother's Day. I was like, there's some really like trashy people out today. I don't know what that is, what that effect is for Father's Day, but I noticed it. It was glaring. We even saw like OnlyFans people. We saw the weirdos come out for Father's Day. I didn't know that, or at least this year they did. In a pretty nice place. We're in a really classy place. Classy. I was in a place where you wouldn't normally see people like this, and we saw them. They were there. I don't know if it was like my dad left me, and so I'm going to go out on Father's Day or whatever. But then we had a lot of like just weirdos, people who were looking for trouble too, which is kind of weird. It was just weird. Have you ever seen that on Father's Day? Any of you guys out there ever seen that? Like Father's Day is like different than Mother's Day, just overall. I don't know if it's like dads are either. My experience with Father's Day is either my wife normally says, "Here's the kids, go spend Father's Day with them. I'm gonna go do my own thing." Right. So when we do Mother's Day, it's a celebration of mom. Then when it's Dad's Day, I spend the day with the kids alone. This year that didn't happen, and then another Father's Day I've done like go golfing or something, or go hiking or something like that. This Father's Day we did things a little bit differently, and it was weird. Some weirdos were out there yesterday. Yeah, exactly, Brian, exactly. Yeah, Aaron Day, exactly. Exactly. So we did that all day long. But then I got roped into a bunch of other stuff yesterday. And I said to my wife yesterday, I was like, I could just go home and sleep. I was like, I just go home and sleep and just chill out. Like chill out from like 2 p.m. till tomorrow. I need some chill time, some downtime, right? And she's like, no, that ain't not happening. You're on a schedule. We got people to see and things to do and the kids and all this and that and all this other stuff. So, and my daughter's friends dad got the alone day where we took their kids with us. So then I get back from the water, right? We're on the water all day long. I get back from the water, get home, and the power was out. The power was out yesterday, and now I'm really frustrated. I'm like, oh, fuck, I got to do this, and I got to do that, and I'm dirty and smelly and sweaty, and I got, like, lotion all over me to keep the sun off me. Everybody's, like, sand everywhere, clean this, clean that. So the power's out yesterday, and I get on, or last night when I think I got home at, like, 6 or 7 or something, and power was out. At, like, 9 or 10 o'clock, I'm like, fuck it. They said 8 p.m., then they said 12:30. Then they said maybe 6:30 today. And my internet is off too. And my phone wasn't working. It was like working then not working. So I'm assuming everybody's on the internet on their phone or something. And so I get on to Discord and I'm like, well, my power's out. My internet is out. There was no weather events. I'm assuming something happened at a transformer or a relay station or something like this. Something happened. So I get on Discord and I'm like, I don't have any fucking power and no internet. And but I'm like, anyways, like an hour after I say that, boom, power comes back on last night. And I'm like, woo! All right, we're back in action again. So I worked last night until I worked trying to get charts out to you guys and like market brief. That was like, dude, I didn't get done last night until like 3:30 in the morning. And then I got to wake up this morning, put the stream up, get stuff done for attorneys. And I'm just like, I haven't had any time to myself at this point, like zero. It's just been like run. Father's Day. So Father's Day needs to be 3 days. It needs to be, forget celebrating that shit on Sundays. We need another holiday. Monday is Father's Day. And we got Juneteenth. So I live in Detroit. Like Juneteenth in Detroit starts on Friday. Like the city is on fire right now. Like at nighttime and during Juneteenth at nighttime, people party. It's like they party during the day, then they do the big party at nighttime, and you can hear it all over the city. It's wild. It's awesome. It's awesome, but it just never ends. So, anyways, that's where we are here this morning. I hope you had a great Father's Day. If you didn't have a great Father's Day, that really sucks. I know that some people don't enjoy Father's Day or are going through divorces or have prior bad experiences with that holiday. So if you did not have a great Father's Day, just note that I probably would have switched places for the day all day long yesterday to be alone and just left alone. It felt like work. It really did. And anyways, so we'll get past all that. Let's start taking a look around and see what's going on this morning. And see what's up with the week ahead. You went through to your dad's grave? That's awesome. That's a good thing. That's a good thing. That was what I was thinking too, Momo, was I had a talk with a close friend. I have a close friend of mine who's a young father, and he never had a dad. And he recently said to me that I remind him of a father figure. And he asks for a lot of advice. He takes the advice usually, surprisingly. But I went over to see him on Sunday morning early. I woke up early Sunday morning, and I drove over to see him. And I told him, I was like, you're a good man. Like, I can see you're a good man with your wife and your kids and stuff. And I just want you to know that as a man, it's really weird. Or I don't know about every man, but in my experience, I feel like I get second guessed a lot. I don't make a lot of decisions in my family. I make the big ones, I think, or I weigh in on the big ones. But I feel like, I don't know, maybe it's because I got a wife and 2 daughters, but we go with what they want to do most of the time. And I was talking to him the other day, and I was like, man, like, if you ever feel like you're going crazy or no one listens to you, you can always contact me. I'll tell you if you're doing right or wrong, and I'll be honest with you. I was like, no one ever is going to tell you if you're a good guy, you're a good guy. Men don't get that a lot. Men don't get a lot of praise from people. You can't do that for men. When you say something nice about a man, this is what's fucked up about it. If you say something nice to a man, if a woman says something nice to a man in public, a lot of times that guy thinks that that woman wants to fuck him, right? Which is inappropriate. So you can't just give a compliment to a man. If you do, you don't know what the reaction's going to be. It could be really fucked up, right? You got a stalker now. So women automatically are like, I'm never going to fucking say anything nice to that guy over there, or any guy for that matter. Stranger, doesn't matter. So just a baseline, nobody tells a man you're doing good. So you need another man to tell a man, hey, your shirt looks good today. You did a great job the other day. I saw you with either boys or your sons. You did a great job. It's true, though. It really is, because it truly is like that. I bet there are women out there that see a man, something, whatever it is. Oh, he brushed his teeth today. I want to compliment him, but I can't, because you never know what he's going to do. The guy at the grocery store is going to fucking start talking to me every time I go to the grocery store. Yeah, that's true too. I agree with that too, Binary Dragon, 100%. Like that whole, like, you got to be the toughest guy in the world, and you can always be strong and all that shit. Can't show any emotion. Can't be sad. Can't be worn out. Can't tell anybody any of that stuff. That shit's crazy. So, anyways, I went over there and spent that time with him. Went over there to be like, hey, I just want you to know you're not crazy. You're doing a good job. Yeah, exactly. All right, so I feel like it's hot in here. I feel like I'm. There we go. Cool that shit down. Okay. So from there, what are we gonna do? Let's look at the first thing. Let's look at let's take a look at the collar. And I mean, let's look at it. I mean, it's fairly easy to see, right? Where are we? It's like blinding, isn't it? It's like right there. You see it over there? It's just like begging to be slammed into, isn't it? It's just begging. When you get that close, like slam, slam, slam. When you get that close going down, it's like slam, slam, slam. It's a magnet, right? It can be a magnet. Might not always be, but it can be. And I think, I could be wrong, tell me if I'm wrong in this, but I think that this collar is at 55.65 into end of the month. We got Opex and then quarterly Opex, right? Two things going on. And it's just glaring, isn't it? Just look at it. It's not that hard to see, right? Not that hard to see. And even this action, this price action here looks a lot like similar price action, right? We can see it right there. Just like slam, 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 right? Slam. So, that's kind of the thesis. That's the base case. It's pretty simple to see. Base case right there. I know some of you are like, yeah, like screw the bulls, we screwed them and went down here, but the truth is probably not. Probably going to try to slam up there into month end at some point. It's looking like it. We didn't do all this down here not to go there, right? We know about that too. More buyers, more sellers, right? Do we have more sellers right here, or do we have more buyers right here? And we were told, no, we have more buyers. So, something like that. 1, 2, and 3 looks right? 1, 2, 3 to get up there. So that's the base case. Into month end. Maybe it's the beginning of the month too. You could even go farther out with a spread and be like, oh, they didn't do it till 2 weeks after July. So that's the base case. And we're in the doldrums of summer. We're in the summer trade. We know what the summer trade is, right? If any of you don't know what the summer trade is, it's a grind. If we're in a bull market, we grind up and up and up. You literally put on a spread, break out a hammock. You break out a spread on Monday. You open up a hammock, right? You put your spread in for the week. Suck back a pina colada. You come back on Friday, and it just melts all the way up into Friday. So we're going to be looking at that as the base case. This is the thesis right here. This is going to be the thesis right here. Guaranteed that's the thesis. We're going to leave. We're going to look at SPY really quick, right? We got the target right here. All right, this is SPY. This is on a 1 minute, but I think it was. I think this was the morning. This doesn't scale right, by the way. But this was the brief, right, from last night. So we got the brief. See that? Traded the brief this morning, right? Pullback, and then where are we going next? Whoop. 546.93, baby. 546.93. Next target. Big push coming up, right? I would say two things to you. I would say number one, in a smaller time frame, 1 minute time frame. See that bar right there? I would not be shocked to see this. Remember that right there, that tick? So you get the squeeze above, get the high tick, pull back. Whoop. And then we grab that hourly trigger, half-hour trigger, and we're off and running to the upside, okay? So look for a high tick, and then look for a pullback to grab this hourly trigger. Probably 5:30, 5:43 or so, okay? Now, can we squeeze up here, get the high tick, and then base right here, and then move higher? Possibly. Let's take a look at how that would play itself out if we did that. So if we head down to the bottom right-hand screen here, this is what I want to show you here, okay? We have pretty decent resistance here. 138 million. We know what happens if we break above and hold already, don't we? That's when if we break above here, we might not even have a pullback. You break above, and that 135 becomes support. And we go boom, boom, whoa, boom, straight shot up. And what is this right here? 55.05, right? Where's the collar at? 55, where's the collar at? And what do we got up here? Collar. See it right there? So they push it up, whoop, 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 right? And then boom, slam it up, push it up. Boom, 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 slam, push it up. So just be conscious of it, okay? And this is the 21st. This is the Friday of Opex. They could actually wait to do this into the end of month. This is the 28th. So maybe like, oh, Cap, there's not enough time to get up there and do it. We measured it the other week, right? I showed you how we did this in 6 days. We got 3% in 6 sessions. So this wouldn't shock me. Nope, not at all. Creepy crawly up the wally. Whoop. Or this wouldn't shock me. Get up here, consolidate down. Creepy crawly up the wally. Bam. Creepy crawly up the wally. Bam. Up into there. Up at the end month end. Okay. So just be conscious of this relentless melt up into Opex and quarter end, month end, which is the 28th. Copex is 28th. Opex is, I believe, Friday. I think Thursday we get AM options, then PM options on Friday, and then we got expiration on Tuesday. We're closed on Wednesday. So that's our base case. Unless something happens otherwise, that's our base case. We talked last week about finding a place to buy a dip. And we're going up now, aren't we? So you find a place, put on a spread. You got the upside targets. You could have even done something in the money. Easy peasy making money this way, right? Bullish to the upside. We have a call wall right here. And we have another call wall up here. We got this one right here trying to break through it. Local. This is a small call. Yeah, this is a smaller call wall than this one. This one's 153. Now, I think this data might have changed this morning, so let's see if we can get updated data. I'm going to assume here it's just the gamma is just moving. I'm going to assume that the gamma is just developing to the upside. Let's see if this works. Let me see if I can get this data going on this thing. Uh, 5370, 5400, 5500, 203. Woof. 5600. We got gamma at 5600. Get the fuck out of here. Are you kidding me? It's not showing up. I might have to rewrite this. I'm going to have to rewrite this. I want you to know that we've got gamma now developed as high as 5,600. So it's going there. It's going there. Looks like 50. Hold on here. Looks like 5425, 5400, and 5370. Yeah, so this wall has moved up. This wall has remained here. And then 5425 is support. 5425 is local support. So if you're looking for another dip buy, it's going to be, where are we at? We're trading right now, 5440. Look for another dip buy on 54.25 and a trade above 54.50 if we can break above it. So you're either buying above 54.50 or buying 54.25, I think, or not you, or I am. I'm buying that. One or the other. I'd really like to see the new high. Get the new high, roll it down, 54.25, and then we take it. Personally, I'd like that, but time is slowing down. Or not slowing down, or losing time, I should say. What else do I got for you this morning? We're going to go over, next thing we're going to do in a moment is we're going to go over the trade for quarterly Opex in just a few moments. I need to set it up. Just give me a few minutes. And I'll explain the trade if it comes to us. I don't know if it does. Normally what would happen would be, right, we would this would be my expectation. This is why I don't know if it would happen or not. So normally I would expect us to kill the or for this setup right here, I would expect that we would kill the VIX into VIXpiration. Then we would have a bloodbath heading into like Wednesday, Thursday, and it would look like it's going to recover on Thursday, and then it would bloodbath down into about like 2:30 in the afternoon. No, sorry, 2 o'clock, 2:30 in the afternoon, bloodbath down to like 3:30. But it would recover like 30 to 50 points in a big way into the Thursday close. With us being closed on Wednesday, I don't know. Pop the collar, baby. You got it. You got it. So, I'm going to read some news to you briefly, and then we're going to head over to the quarterly Opex trade in just a moment. Hold on here. I've got some allergies or something. Blah. So expectation, we have a little bit more up to go, pullback, and then higher. What do I got here? We'll leave that up right there. I'm going to read some more. That's the other thing. So on Friday, there was no data on Friday. It's like Friday was slow news day. There was nothing going on Friday. So hopefully we got some more information this morning. And we're going to take a look at some of that stuff that came out and see what the thought process here is here. Headlines this morning. Bill Gates wants to invest billions in nuclear power, according to Bloomberg. I agree with that statement 1,000%. I think it's in pure insanity right now that we are not more invested in nuclear power. According to Financial Times, Biden is prepared to release more oil from strategic reserves if gas prices rise. This is stupid. You guys know that, by the way, if you're a pro trader, I posted for you natty gas charts. You're going to get them for how long? You're going to get natty gas charts from me. Do I have that in front of me or no? I just want you to know that we are coming into seasonal. I'm going to go through seasonality right now as a whole because we're coming into a new quarter. I want to talk to you guys about quarterly trades. And we're coming into a new quarter, so I want to discuss some of this. You've got the end of the NASDAQ trade that ends on July 17th. Okay, July 17th, mark that on your calendars. The NASDAQ tech trade ends on July 17th, roughly in and around there. The volatility trade begins on July 3rd and lasts into October 9th. Treasury bond trade already started, right? So the TLT trade started on the Treasury trade started on May 12th. That continues into October 7th. Consumer staples and healthcare, that's on until November and December. The marking something else. Set an alert at home that the utilities trade is starts on July 23rd, lasts until October 3rd. Biotechs starts, I should say, on June 22nd. June 22nd. So biotech trade runs from June 22nd to October 1st. So if you're looking for a quarterly trade, you might be able to get a sweet trade on biotechs. I like to see some of these seasonal trades burn a little bit longer. So if it starts on June 22nd, maybe take a peek at it at the end of June. What else we got coming up? We've got a household goods starts on June 25th, lasts until December 30th. Real estate starts on July 1st and trades until September 19th. Oil exploration begins on July 23rd and trades until September 20th. Natty gas starts on September 3rd and runs until October 30th. Live cattle starts on June 23rd. Wheat, I said natty gas, I was wrong. I think we did the wheat chart for you. The wheat trade, wheat thins, starts on June 30th. Crude oil starts on June 21st and lasts until August 20th. Copper starts a run on June 27th and runs until July 28th. Silver runs on June 28th until August 4th. And we're doing silver charts for you right now, too. And we're doing gold charts for you because they have a run coming up in late July, July 27th until October 10th. Whew. So the pro traders should be getting some seasonality type charts here coming out shortly. And on that same note, you've got Biden saying he's prepared to release more oil from the strategic reserves if gas prices rise. According to Neil Kashkari, non-voter, a December rate cut is a reasonable prediction. French polls suggest that Le Pen's national rally is on track to receive about 35% of the vote, while Macron's party is expected to come in third place with about 19% of the vote. The ECB has reportedly not discussed activating the transmission protection instrument, which is aimed at preventing bond spreads from widening significantly. What else I got here? The equal weight S&P 500 ETF is underperforming the SPX in the early session. There was some discussion this morning about how NVDA is carrying the entire market. We know what happens, right? We rotate out of that. Coming up shortly with that seasonality calendar, we're going to rotate out of tech and into other names more than likely. Goldman estimates that the corporate blackout window has started. 50% in blackout now, 80% by end of week, and will run through July 19th. Desk flows slowed slightly last week, according to the desk, and volumes finished the week 1.4 times versus the 2023 year-to-date ADTV, skewed towards financials, listen closely, financials, consumer discretionary, and tech. Per GS, companies can buy through their blackout period as long as they have implemented 10b5-1 plans before entering the blackout. We estimate that 80% of corporates utilize 10b5-1 plans on the authorization front. 2024 year-to-date authorizations stand at $650 billion, or it's $650.8 billion. Less or greater than 4% versus the 2023 year-to-date authorizations. So we're up right now on buyback, or on buyback, not buybacks, on flows, on corporate flows. Also from GS, we continue to see ongoing demand from the LO community, Super Cap Tech, While hedge fund flow has been more defensive and lacking velocity, we continue to build momentum in larger liquidity trades for clients, trading greater than $4 billion month to date. That's why you keep hearing people blab their ohm on CNBS. The trade's in good names. The trade's in good names. The trade's in NVDA. The trade's in Apple. You hear it nonstop, right? Nonstop, nonstop. We continue to build momentum to larger liquidity trades for clients, trading greater than $4 billion month to date. Month to date. Woof. Last week finished with yet another large buy skew from LOS to the tune of $8.5 billion, while hedge funds were net sellers of $1.5 billion. Demand in order of magnitude was seen in macro products, macro products, infotech, communication services, and discretionary. Financial was the only sector net sold on the week. Now, there was some earlier they were saying that they're buying financials now, so look for that buy in financials. Mideast update. Following the resignation of MK's Benny Gantz and Gadi Eisenkot from the government, Prime Minister Netanyahu announced that he is dissolving the War Cabinet. Some of the issues previously discussed by the War Cabinet will now be transferred for discussion in the Security Cabinet, but sensitive decisions will be addressed in a limited forum. On that note, be aware if you're taking trades for Q3 that we likely head into volatility seasonality into the end of the Q3 trade. Be aware of that. So plan for that trade to materialize, and greater focus on geopolitical events. You know, you got Taiwan, you've got what? You got the trade war with China. You've got Ukraine, right? You got Russia saber rattling right now. And then we've got the second big thing, right, which is the election coming up in the second or back half of the back quarter of the year, right? So that could come into focus, right? The microscope comes down and you start seeing people getting heated and fired up for the election. So be conscious of that into the back end of Q3. What else do we have here? I'm not going to talk about Autodesk. What else do we have here? Goldman Sachs at 11:30 this morning coming out with more data saying we raise our S&P 500 year-end target from 5,200 to 5,600, 3% from current level, driven by milder than average negative earnings revisions and a higher fair value PE. We're going to look at that too, the PE ratio. Why do they say 5,600 but not 6,000? Anybody know why they're not saying that? I'll show it to you here in a moment. Driven by milder than average negative earnings revisions and a higher fair value PE multiple from 19.5 to 20.4. Our 2024 and 2025 earnings estimates remains unchanged, but stellar earnings growth by 5 mega-cap tech stocks have offset the typical pattern of negative revisions to consensus EPS estimates. We expect roughly unchanged real yields by year-end, and strong earnings growth will support a 15 times PE for the equal weight S&P 500 and a 36 premium multiple for the market cap index. Alternative scenarios here. Catch up. The S&P 500 will end the year at 5,900. This is from GS. Plus 9% from today. Catch down. The S&P 500 would fall to 4,700. 4,700. Why are they saying 4,700? Why? We'll look at that in a minute, why they're saying that. I already showed you that last week, right? I showed you why we would trade that. Continued mega cap exceptionalism would lift the index, ready? To 6,300. The market could trade 6,300 into end of year. Then we've got the recession fears. Would push the index down to 4,800. 4,800. We already know that the stagflation trade is 4,850, right? I've made that number crystal clear to you. I've said we do not want to trade 4,850. We definitely don't want to be closing under 4,850, do we? In any way, shape, or form. That's the stagflation trade, right? Why are they giving you these numbers? Why? Why is GS giving you these numbers? I gave you these exact numbers about 3 weeks ago. I gave them to you. I said, these numbers matter. They're going to matter into end of year. Why are they going to matter? Because they use the same shit that we use, right? We know where the monthly trigger is going to be, don't we? We know where it's going to exactly be on the election volatility trade. It's at 4,650, 4,700. We know we're at an inflection point. We didn't want to go trade below 4,850, did we? That's the stagflation trade that Jaime Dimon was talking about, right? And now we're looking at 6,000, 5,900, 6,300, an overshoot into end of year. How do we know that? We've got it charted all the way up there, don't we, to end of year. So as we inflect at the next stage after or at the end of July, right? We have an inflection point that begins in the end of July that runs down into mid-September, right? We want to know how deep do we go, don't we? We don't want to be going under 4,850. We don't want to be trading 46 and 4,700. We do want, we getting an all-time high right now? Oh, yeah, we are. We don't want to be getting no, what we really want is what? We want that trade down, right? That rollover trade, get the season of volatility up. We want to get all these people on. We want like 3 or 4 accounts on Twitter, on FinTwit. Your favorite accounts on FinTwit. You know, the guys that sound smart. You know the type, right? You know the FinTwit accounts that use big words. You know, they go out there and they pump the narrative to the market's going to crash. And then they make it sound really intelligent. They use big words. And then you regurgitate it. And you pump it all over the fucking place. Right? And so we get that election volatility going on, and then you get on FinTwit, and you're like, the market's going to crash, right? And we suck you in and trap you in. We take all your put money, all your short money. We drive this thing to the moon into the end of the year. But we're gonna need your money first, though. So all you bears out there, right? Get out there and drink that Kool-Aid. You get primed up. You're gonna get primed up for the fall. I want to wake up in the morning. I want to wake up to trending on FinTwit. Stock market will crash on election fears. And I want to make sure we're going down as it's happening. So you just keep rolling puts and rolling puts and rolling puts. And then we're going to reverse it to the upside. And we're going to trade that 6,000 into the end of the year. And you're going to go out there and go scream, what? They're wrong again. I was told election crash. I was promised an election crash. We were rolling down, bro. It was going great. Yeah, it's because of this reason and that reason they turned it around. All right. NVDA CEO Huang to appear at HPE's Investor Relations Summit. on June 18th to speak about the company's AI partnership. All-time highs, trading 544.15. Whew. Let's open up the pivots. See if we can get some guidance on what to expect here. Above, we have 544.77. R2. 544.77. Right up here. Snap a line at home. 544.77. Yeah, we got that on one day. Good job, good job. High fives all around. Winky, I love you, Winky. You will not get pullbacks and you will like it, Winky. You will not get them. You're not allowed. Market is not allowed a pullback. It is a melt up, relentless, never ending. All right, we're going to look at some other things here. Let's look at, what do I got here? What am I looking at here? No systematic flows, seasonality. SPX seasonality. Oh, yeah, let's look at it. Winky was just talking about pullbacks, and that does lead us into our next conversation. I will post this for you in the Discord right now. I'm going to post this for you in the Discord. Whoa. Whoa, man. Save this right here. Post this in the Discord. 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 All right, so I just posted this in the Discord for you. We have not had a pullback. We haven't had a bullback once yet this year. Let's see. Well, we did get one. We got our seasonal pullback, but it was late, wasn't it? We got another quasi pullback here, but it was a pullback of strength, right? It wasn't like, yeah, well, it's kind of similar. Spread out a little bit, but this kind of matches. It's not the time frame we wanted, was it? We got this pullback right here, kind of, didn't we? Got a pullback there, pullback there. All right. Let's take a look at this really quick, and should we bring this up? Whoop. Let's see if we can divine anything. Let's see if we can divine anything. Oh, wait a minute. Can I rotate this? How do I rotate? Oh, yeah, baby. Oh, shit. What are we doing? Whoa. Can't get this on CNBC, can you? What do we got? Peeking out right in here, right? The 145th trading day of the year. We should max out right around the 145th trading day of the year. Or at least on average, 145th trading day of the year. Right? Then we start to what? Consolidate. And what are we doing in here? Let's get rid of that ruler. And then we consolidate here, right? And then we begin to roll down on a high about the 173rd trading day of the year. 145, 173, roughly there. Now, have we been perfect in our estimations? Nope. Has seasonality followed exactly? Nope. But let's see where it's at. Let's get a rough idea of what to expect. Oh. I'm going to break out my hot guys calendar. My hot guy calendar for the year. It's been a hot guy calendar. It's been a hot guy calendar year, I can tell you that much. Definitely hasn't been a cold guy calendar, has it? So we got 145th trading day of the year. July 30th. Did I get that right? Yep. July 30th, 145. That's in reverse. I apologize for you, but. So we should expect some party time into July, huh? Maybe the end of July, some party time. And then we consolidate from the end of July. That would mean we buy dips, we sell rips, right? Range expansion. Why do they call it range expansion? Do you know? I've already told you this in the past. I've taught this to you guys in the past, right? Geopolitical risk, right? Election unease in elections, right? Unsure about melt-up situations, right? Too scared to buy a dip. I've shown you this in the past, right? We get range expansion for specific reasons, don't we? So some range expansion going on in that time period. We should have an expectation that we then sell down into September 9th. Could be September 15th, September 10th. Rough idea of where we're going. It's okay. I got you. Ready? Just write this down on a notepad at home. We should go up in and around July 30th. Okay? From July 30th Oh, sorry, I got that wrong. Sorry about that. I misspoke to you guys. We should go up to around July 30th, okay? So we should go up to about July 30th. From there, we should have range expansion. That's a sideways trade. You buy dips, you sell rips based on geopolitics, elections, Taiwan, you name it. Oh, fuck yeah, baby. Moon it to our fucking 2. Slap that ass. We trade sideways until September 9th. Sideways until September 9th. Not down. I said down into September 9th. That's wrong. You buy a dip, you sell a rip. Range expansion. All the uncertainty. Oh, I didn't buy a dip. Oh, I didn't feel comfortable. Oh, Cap told me to buy a dip and I didn't. I don't like chasing. That blah, 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 right? From September 9th, we should trade down into the 189th. That's the end of September. October 1st, right around there, we should bottom out. That's your election volatility. Now, do we get election volatility a little bit longer this year? Possibly. I would be hard pressed to not think that we might not trade down a little bit more blood. But October 1st, where are we going right now? Trading 544.88. right now on SPY. With conviction, breaking through local resistance at 54.50. Looking to now trade 5,500 on S&P 500, baby. Where is our 3? Where's our target? 546.93 is our target. Hanging dong. This is our target right here. 546.93 on a measure. Right there. Okay. They're just like, fuck your pullback. We're going straight there right now, Cap. On a Monday. We ain't got no time left, Captain. Gonna kill that VIX, baby. If you missed the bus, you can sign up on our website to become a member. And you would have known this morning to buy the open. $30. All right, so what do we got next? So we did seasonality, right? We did seasonality. Just a note that the European stock market is trying to stabilize today. The OAT bund spread is coming back slightly. What else? Gamma Flip moved lower to 53.70 on Monday. 5,400 is solid support. 5,450. 5,450 was resistance. We just broke above it. At the money volatility for tomorrow is slightly elevated as markets will receive the retail sales print, which feeds into the GDP Now release that comes later that day. Just note that we have some expected volatility tomorrow on retail sales, which feeds into the GDP Now release later in the day. Say that again to you guys, okay? Or should I post that? I'm going to write this inside of it. I'll put that in the Discord. What else do I got for you this morning? We're going to talk about the trade. We're going to talk about the trade for let me get my chair here. Hold on one second here. Give me just a moment here. I'm going to read through some stuff here, okay? What about that rebalancing, unclenched trade? What about that? We got an unclenched window of weakness, unclench. Window of weakness, unclench. I'll give you unclench. How about a fucking face rip right to the fucking moon? How about we fucking squeeze your unclench right out of the fucking window of weakness, my ass? Exactly. Window of weirdo. Okay, so let's think about some stuff. Let's talk about some stuff here. Trying to find it right now. Give me a second here. Hold on, give me a minute here. I gotta dig this shit up from the depths of the basement here. Where is it? Where is it? Trading 545.32 right now. Oh yeah. Oh yeah. Blinding right now. Scroll through. What am I looking for here? Hold on, I gotta start somewhere else. Hold on. Early June. Yes. Okay, yes. Yep. Yep. Got that. Hold on, one more thing I gotta look at here. I got a few things I gotta look at. I don't want to fuck this up. I want to make sure I have this correct. Hang tight, I gotta write some of this stuff down here. Make sure I don't want to mess this up. Okay. Got all that written down there, of course. What else do I have here? Oh yeah, here we go. I got it. Hold on here. Yeah. All right, hold on. All right, give me one quick second. I got some work to do for you guys, okay? I got some work to do in the background down here. Well, not background, but down below. I'm going to do some work, okay? We're talking about this ex-div trade. All right. Nope, not right there. Right in here. Let me snap a line up in here. March the 14th, I think, right in there. Yeah, there it is, right there. Nope. No. Nope. There we go, right there. Yeah, right there. Is that it? I think that's the trade. Is that it? Or is this last year? Yeah, there it is, right fucking there. God damn. All right. So how do I express this to you guys? Give me a 5-minute ticker. We do 5 minutes. We do 5 minutes? You have enough data for this? March. No, dude. No. I already clicked the button. There we go. Let's get down in the dirty of this. Right down there. Let's do this whole dirty thing. Okay. You ready? We're going to look at the March Opex. Quarterly expiry for March. That's where we are right now, right? Let's see what happened in March. Do I think it'll be exact? No. We have a day off this week. We have a day off. Dude, wait till you see where we're going next to. Wait till you see the next target. It's like, see this PT 546? This ain't shit. I got a higher target than that. Let's go down here and take a peek down here, okay? All right. This is the March expiry. Here's Wednesday, right? Monday. Here's Monday. This is 9 a.m. 9:30. Monday. Look at that. Monday. We're way up there. Whoa, way up there. Right? Opex week. Cranking, baby. Opex week, right? Now, this Wednesday, we're closed. What are we going to do? What are we going to do? I don't know. What I would say is this for this week, okay? What I would say, if there was anything to look at here and take away from this, some nice buybacks, right? Bam, bam, right? There was a bloodbath down here, wasn't there? Wednesday, right about here. You're sitting right here. Look at this. I want you to see this right now. So you're like, boom, boom, we're up here, right? We're consolidating on Wednesday. Then you're like, oh, yeah, we're definitely going to go up, right? We're going to go down here. We're going to go up. And instead, we blast down to the hourly trigger. And we didn't hold it, did we? We went straight down to the depths of hell. So you're thinking to yourself along this whole way that any pullback to the dip hourly should go moon, right? And instead, they rolled us straight down to a prior low back here. Really hard and fast. This happened trading 515.68. We peaked out at 1:30 in the afternoon. We can learn that, right? 1:30 in the afternoon. Guess who came out to play? Put Mafia. On a high for the day, and you're thinking we're going to go up here into close, right? Bloodbath. Straight down. Half a percent. From the peak, roughly around 2 p.m., 1:30, 2 p.m., to a bottom tick about an hour and a half later. If we lost 50% on a roll right now, or if not 50, but excuse me, 0.5% in about an hour and a half, you'd get smoked, wouldn't you? And what do we have coming tomorrow? What do we have for news tomorrow? What did I tell you we have for news tomorrow? We got retail sales in the morning, and then we've got news in the afternoon, don't we? We're closed on Wednesday. Closed on Wednesday. And so we can't, so Wednesdays, we're going to get fucked there, right? They're going to want to park it for Friday, right? So maybe tomorrow at like 1:15 in the afternoon, 1:30, 2 p.m. That's right. You got retail sales in the morning. You've got, in the afternoon tomorrow, you end up having, also in the afternoon, you end up having GDP now. So maybe that could be the catalyst. GDP now could be a catalyst. We want to look for that high, though, don't we? And we're doing it right now, aren't we? We're squeezing, aren't we? We're squeezing right now. So they squeeze us all the way up. And then on any pullback down to the hourly trigger, maybe we just wait and see, right? What happens? Does it bounce or does it blast through? On Tuesday, not Wednesday. And then we catch this trade down below here the last hour. Straight fucking moonshot. You buy, not you, but if I buy zero dates, what do you think that payoff is? Woo. Fire. It's fire. Look at that bloodbath over here. Rip up. Now, normally they would dump these things, right? They didn't this year. So this is Wednesday and a Thursday, but they dumped it on Thursday once the dividend was paid, right? Cha-ching. So you take away the dividend using zero dates. You exercise the option. You collect the dividend, and then they dumped it back all in the market again. They just dumped it. We blooded. Then we blooded some more. Unclench. Window of weakness. So, how do we extrapolate this? How do we extrapolate that? Well, let's look at the 30-minute. Let's go to the trigger screen. Hold on here. Trigger screen. Boom. How do we extrapolate this? If it were to happen, how would we? What would we do? What would we be looking at or looking for to do this? $546.93, boys and girls. We're going straight there right now. Straight moonshotting it. Straight moonshot. 546.93, right? $30 minutes. Get rid of this. Somewhere in there. We got Tuesday, right? 1:30. Tuesday, 1:30, right? We're closed on Wednesday. Come back on Thursday, right? Hey, a minute. Hold on. Oh, no. Hold on a second. Come on, now back over here. Get this closer. 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 Tuesday, 1:30. We got that out there, right? Tuesday, 1:30. We're closed on Wednesday. We got Thursday and Friday, right? That's 4 a.m., right? 4 a.m. Hang tight one more second here. Make sure I got this right over here. I don't want to mess this up with you guys. March 14th. Wednesday bloodbath up into Thursday at 7. So we got Tuesday, Thursday at 7. Then we bleed down Thursday. It's at 9:30 on Thursday, or not Thursday. Sorry about that. Thursday, 9:30 up there. Right about there, somewhere in there. Somewhere, I think I got that. So, I think I got this kind of right. Right there, somewhere in there. So somewhere right in here. Somewhere right down in here, right up into Thursday. And in that trade, we're going to be looking for some kind of a bloodbath. A minute. And I would bet, what's 0.5%? Ain't going down that much, is it? About. Right about there. Drive it up, 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 and then boom. And then boom, you're buying that. Straight up. So I'd be looking for Tuesday, 1:30 in the afternoon. If we're relentlessly trading all the way up into Tuesday at 1 p.m., 1:15, half a point down, and then bam, straight up into we close Wednesday, open up Thursday morning. Close Wednesday, open up Thursday morning. We start selling. This is the 21st. We sell down at an unclench to trend at 532.27. And this would be your dip buy. This would be your dip buy into July 19th. Oh yeah, we're looking way farther out in time. Way farther out in time. Just like that up there. Bam. Bam. Make sense? Do you want to take a snapshot of that? Unclench, rebalancing. Park the bus. Get up and over. Right, boom. Come back up right around here for your end of month. Boom, straight shot into the 19th. Make sense? Roughly that. Here, how about, do you want me to take a picture of that? We'll look at it again down the road. Hold on, let me see if I can get a... We'll check it, see how far off we are. I'll save that for later. Wham, 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 bam, rebalance that shit for July, run it up into end of July. Looks good to me. That looks pretty good, right? Not so bad, right? Target to the upside. 450 or 552, 555, 554, something like that. Something like, hold on. We'll clean this up. Right about there. Right about, let me do a new snip. There we go. I saved it. 555, 560. I mean, we could even go higher, couldn't we? We do 575 up here, possible. $575 range right in here. Then we start consolidating over here. Ping pong, ping pong, ping pong, ping pong. Into September. Roll it down. Ping pong, ping pong, ping pong, right up in there. $585, $575, roll it down. Ooh, baby. All right, I'm going to delete this now. Goes right down to the shit can. Flush. Bring that bad boy back up. There we go. 546.74. $546.93. All right, let's see what we do here. Nice and clean. Right there. All right. So you guys know where the pitfalls are. Winky just came out and said, Winky said, I think he said 4 times, stay frosty, pullbacks coming, possible coming, I don't know when. Just gave you a date for it, 21st to the 26th. Rebalancing, window of weakness, pullback for a July trade to July 19th. I'll read it to you one more time. You ready? Traded up into the 21st. Trade it down into the 26th. Rebalance. Bull trade into July 19th. Write it all down at home. That's the most rational answer. Listen to me closely. If you're a bull or a bear, that is the most rational expectation you can have. Can we go above it? Yes. Can we go below it? Yes. If there was an idea, like a rough roadmap, a plan, I think this is going to happen. Probably a 70% chance of this happening. That's it right there. Now, can we trade an extreme? Can we do a 2 sigma move down in that pullback? Sure. Can we do a 2 sigma move up in the 21st? Sure. But that's roughly the expectation. Make sense? Anybody in disagreement with this? Anybody at all? Anybody out there disagreeing with this? Anybody calling for a That is your highest probability outcome. That's it. It's not guaranteed. Not guaranteed. Things can change. Someone can die by accident. Someone can start a war. What's the new flu they got coming out these days? What's the new flu? Cow flu? Bird flu. We got bird flu now. We got the bird flu. We're going to the depths of hell. That pullback, so that election volatility trade, right? So when we start trading that sideways trade, that range expansion trade, here, I'll read it to you guys right now. Give me a second here. And I'm going to read you guys something that's going to come true. I got something that's going to come true. I've done it once before. I'm going to do it again. We'll predict the future. We'll break out the crystal ball here. I can't find it right now. I'm trying to find it. I can't find it, actually. Anyways, I used to post for you guys an article that would state that when we come into that range expansion, there's an actual article out there from Investopedia. It's not the range expansion article. There's another one. They have a range expansion article, but they have another article that goes deeply into it. It's like when there's uncertainty, they give you all the uncertain events, right? They give you they'll start to talk about politics, geopolitical stuff, not wanting to chase, wanting to buy a dip, recession fears. And every time we do it, all that stuff comes up in the news. The news like literally prints these articles that are exactly match why we have range expansion. So when that range expansion trade kicks off in July, between July 19th and July 31st, you should begin to see a range expansion trade. And we will buy the dip, sell the rip, buy the dip, sell the rip, buy the dip, sell the rip, and then we'll roll down into the doom and gloom trade for the election season. And that will be a giant dip buy. Giant. Because we should run from that dip buy into 6,000 at least into end of year. At least. And I'll tell you what. That GS article saying we could trade 6,300. I'm going to tell you why they said that today. That housing cycle could extend that bull market into 2026. Is it guaranteed? No. But I would be paying very, very, very close attention to one specific thing, and that would be rate cuts. We don't cut rates in December. If we don't cut rates in 2025, we don't cut rates until 2026. It's possible. You know, we could be reliving, 1995 to 2001, where they run this fucker to the moon, and that 6,300 projection is probably wrong. You could see 7, 8, or 9,000. If we did that trade, I showed you guys last week, right? If we did that trade, I would expect high volatility, like 20% down, 30% up, 20% down, 40% up. Wild price action. That's just like the 1990s. It would be violence. I mean, like fucking violent. It would be the year of volatility. I don't know that we get that trade yet, but if we do get that trade, that's going to shake out bulls and bears. I bet that would shake out, for retailers, I bet it would shake out a ton of people. Ton. And you'd probably shake me out. If we went down 20%, I'd be like, we're fucked. We're going to a bear market. We're done. Trade's over. Done. And then all of a sudden we shoot up 30, 40%. It'd be like a reverse crash. We're crashing up trade. I don't know if that happens. That housing market is going to be a key point or a key factor, and rates are going to be a key factor in that trade, I think. I think those are the two that you look for. The only other thing that I would be looking for would be unemployment. I don't give a fuck about inflation. I mean, I care about it. I care about the velocity of inflation. If it bounces off 2%, and then starts to ricochet to the upside. I would really like to see inflation just kind of like putter sideways, maybe even get negative. Hear that? That's the first time he's telling you that, right? Inflation goes negative. Year-over-year inflation goes below like 2%, 0%, slightly under 0. You get like euphoria, right? McDonald's cheeseburgers are now 39 cents. Maybe not that cheap, but, you know, you guys are spending money. Fucking PE ratios are going to the fucking moon. Everybody's all pumped up. Then the Fed's like, we're going to cut, dude. We're at 0 now. You guys are fucking buying houses hand over fist. It's the top of the housing market. It's 2026. They just fucking sell right into you relentlessly for a decade. They don't sell the whole decade, but it's a pretty nasty bloodbath. Yep. So that's all I got for you guys. Remember today, too. Remember, today's Monday. It's 1:12 in the afternoon. What happens at 1:30? Who comes in? Put Mafia. They're going to try every day at 1:30. Every day at 1:30 they're going to try this week. Be wary of 1:30 in the afternoon. We'll mark it right here. Be wary, 1:30 in the afternoon. Put Mafia. A bunch of savages. So yeah, I think we got it all. I think we got it all covered. They come in twice, or they try it twice. They're gonna try this fucker. It's like wham, wham, wham. They did it right here. They did the first attempt was right here. This is your first attempt right here. They're gonna go up here, try it again. Try it again. They're gonna come in and try it. They'll try it. They're gonna try it at 1, 1:15, 1:30. They try it again and again. Between 1 p.m. and 1:30, they make the attempts. They don't always succeed either, so be aware of that. But they come in on a down day, right? At 1:30 in the 1:30 in the afternoon, Vol Control gang comes in and saves the market. Every day at 1 o'clock, 1:30. If we're on an up day, fucking Put Mafia comes in. Up days, Put Mafia. Down days, Vol Control gang. What else? We know that on third, we know we'll close Wednesday, fly in the payments. We know Thursday, there's a good chance they're going to start to deleverage. They're going to, what do they call it? Window of weakness, unclench. Does Spot Gamma say anything about this at this point? I don't have Spot Gamma. I don't know what they do. Has Spot Gamma mentioned the 21st? Anybody out there? I know you guys are all over that shit. Spot Gamma said anything to you guys about this? No? Nothing? Maybe, I don't know. It's Thursday this year because of being closed on Wednesday. Well, I think it could be tomorrow, too. I'd be paying attention to it tomorrow because we have some events around it. Let me be clear on this. We got retail sales in the morning, then we got GDP now in the afternoon. GDP now might be that bullshit reason to do it. And then you got Thursday too. It closed on Wednesday, so it's kind of like wonky. I would be looking for it tomorrow and Thursday due to Wednesday being closed this year. FinTwit, he comes on the show. He's busy this week. He's actually going to be a mentor with us soon. I think. So we should be looking for them, or we should be looking for him soon. Having a page on our website and stuff. He's on FinTwit. He's fucking awesome. He's a pro. He's a fucking baller. Smart as fuck. Handsome. Sexy man. Smart as fuck. Badass volatility trader. Trading 546.20 right now. Look for a pullback off of this to 546 or 543. 543-ish, somewhere down there. Where are we at with the hourly trigger? Half-hour trigger. Yeah, right around this 543. This R, what is this? R1. Something like that. Bam. Slap it. Where's SPX scam at? Time is that? 11:30? 12 o'clock? 11:30, 12 o'clock. Yep, right there. Just like that. Just like that right there. It's price or time. I can't do this in a 1-minute chart, but I would expect we tag this, consolidate into the close, and then look for the next drive higher. Price or time, I'll take either. And then we're going to target 555 or 549, then 552. Then we're going to target 555 on a pullback. Oh, yeah. Oh, fuck yeah. We should get it done either Tuesday at 1:30 or Thursday open. Tuesday 1:30, Thursday open. Does that help too? With some targets for those upside targets. Trying to figure this out. It's hard to figure this out being closed Wednesday. Wednesday is like a fucking wrench right now. It really is. It's a fucking wrench right now. I would say that those two things. Hold on a second here. Trying to find out when GDP now is tomorrow. Hold on. Tuesday, GDP now. What time is GDP now? On Tuesday. Anybody know where that is? Go to the GDP Now website. GDP Now is what time? Let me ask on Twitter. See if we can get an answer to this. No answer yet. Maybe we'll post it. Pin it to my profile. Let's see if we can get somebody to answer that question. Typically releases 2 to 3.5 hours after retail sales. I think. It's updated within a few hours. Ready? Retail sales. 10 a.m. I said 1:30, so 10 a.m. Roughly 10 o'clock. Yeah, Winky, you've been on that Lily trade for a long time now, haven't you? What was the other one that you sent me this morning? CCL, right? I looked at it this morning briefly. I want to look at it again. Oh, it did fucking turn around. Son of a bitch. It did turn around. Do you think it rejects here, Winky, or no? Do you think it rejects here, Winky, and goes down more, or no? Do you think that it's going to go lower? So Winky was saying that take a short off CCL. he had brought up, he had sent me, I think, a month or two ago that Carnival Cruise Lines had, they were running discounts. Oh, they did, Winky? Did you see how shitty their velocity looked? Did you see how shitty the velocity looks on him, Winky? Like, it looks like it wants to fucking go to zero. Yeah, discounted on their gift cards. I saw that shit, dude. That was fucking crazy, bro. I think they're going to zero, dude. I think they're going to declare bankruptcy. I looked at that velocity on CCL today. This morning I did, and I was like, oh, God, no. Like, their weekly velocity looks like shit. It looks like dog shit. And their daily velocity to the downside is just getting started to the downside. On a daily chart. Check it on a daily chart, dude. I think they're going to declare bankruptcy. I think they're going to look for bankruptcy protection. Oh, they're going to try. Guarantee it. They're going to fucking try. These goddamn fucking mafiosos. Savages. Look to buy 543. And they're coming back. They look great. Like CCL, this all looks good. I mean, this looks beautiful here. Intraday daily velocity on let's look at an intraday on it. Like its hourly looks good for a squeeze. The hour looks great on CCL, but their daily looks like shit. On the day chart, it looks horrible. They're just starting weekly blood. The monthly looks great. The monthly looks great. The quarterly looks great, but the weekly looks like shit. How about $3 and how about $3 and how does does $4 have a nice ring to it? I don't know if it's done going down. It's on its daily trigger here. Like it trades, hold on. Like it closes the gap above and then continues lower. How do we show this better? Nope. Day chart, maybe? Something like that. Up, close it up, down, 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 and then up. Trade back to this $20. July 25th, I've got a low of $3.90. CCL. Should squeeze today. Close the gap to 1648. CCL. If it backtests, though, it could go up. It could go up from here. This whole area down here is going to matter. Whatever happens on this pullback here, I mean, it can go up from here, but I'd be watching whatever happens in here is going to be important. Quarterly velo looks good. Monthly velo looks good. Weekly looks like dog shit. That's why I think we have one more low coming in on this. One more major low in CCL. Woo! 546.97. Holy fuck. All right, now I think we're getting a pullback to 543. If you don't believe we're getting a pullback to 543, your next target is going to be 540. We already hit it. God damn. Did we hit 547? Did we get above it? We did. Woof. We already tagged it. 548. How about just how about we just hold this 547? We just want to hold it. We just want to hold it. I mean, we tagged it. Where's the upper bound of this? All right, fuck it. $542 it is. 552, somewhere up in here. God damn. Tuesday. Where's Tuesday? We're just fucking humming right along. All right, fuck it. That's as far as we can go with it. We're on a 1 minute chart right now. Price target hit. Look for a pullback to 543. Next target for SPY, 552. Fucking dude, we don't have any time, do we? They're just gonna do it. If they just do it, I'll fucking shit my pants there. If they just go up there and do it today. Today, intraday, we've got two higher targets: 548.70, 550.66. Oh, Jesus Christ! Oopsie, I shouldn't have said that. Tomorrow, 552 and change. That'll be your weekly target on the bottom side. God damn, dude. They're not even going to wait. They're just going to run it up. They want to reject 556, 548.77, 550.66. If we just go up there and do it right now, I'll fucking shit my pants. I didn't expect this. I'm expecting a roll down to 543, so I could be wrong here. If we do it today, the target is 550.66, 548.70. If we do it tomorrow, it's 550, then 552 on the expectations for tomorrow. Holy shit. Compressed week. If we get it today, I'll shit my pants. We have a short week. We're down a day today. We're down 1 day today, so we got Wednesday off. So they only got that much time to get up there. And we got to go to 555 too. Let's look at SPX really quick again. I mean, it just wants to go, doesn't it? 5,500 is the target right here. This is the target. Call wall target 5,500 on SPX. I want to see the pullback down. I want to see the pullback to go, though. I was expecting, I'm expecting like, you know, come up. I was expecting a pullback down here, then up, right? And then a pullback down here and then up. So they're looking like that. I mean, I'm not positive on this, but target's 5,500 in SPX, so we don't have a lot of time to get there. We don't have a lot of time to get there. What's going on with IWM? Oh, hell yeah. Let's look at IWM. Let's look at IWM. What do we got here? Ready? IWM opening. This should sell too. IWM should sell up here. And then we trade 201, then we trade 205. This is the open. Right here. Down, up. But if they don't wait, dude, if they don't wait, they just start setting us up. Maybe we just go to 202 straight there. Maybe there is no pullback. Maybe there is no opening pullback. We just go straight to 202. If they can hold 200, we're trading 199.80 right now. If they can hold 199 on IWM, it's possible we just trade 201, 202, 201.50, 201.50, 201.65, excuse me, 201.65. Woo! TNX getting bullish again. VIX 9-day getting murdered. HYG okay, looking bullish. Dixie getting rolled right now. Dixie tagged our high target up here. 105.731, rolling down right now. I wonder if we just go straight to the moon here. We might just go straight moon. Here, I'll snap some lines so you can see them. So you can see the prices up here. $548.69, $550.67. If we reject that, we should still trade 552 and then 555. And with it being a short week, I don't know if they do it all by like open tomorrow on Tuesday. What's that? 550? Oh no, we're trading 552. We're going above 550 this month. 100% guaranteed. On SPY, we should trade 555, Winky. I don't know if we get the 555. Yeah, 555 is possible. That would be if we're an extension up. If we get the 555 because of Opex, I'd be like, fuck, the collar, man. Yeah, I think, I don't hold me to this, but I think that, I think Andy Constant figured 55.70. I think he's got the highest target. 55.70. Oof. 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 Squeeze every single short out of the market. Every single one of them. I got us hitting this and rolling down 543, then trade 49-ish. Reject it, then blast over it, get over 550, then hit 552, then come back down again. And then 555. Or 554.90, somewhere in there. I have to put a measuring stick up and see exactly where it is. Oh, really? I haven't been on Twitter. I'm about to hand off all of our handles to be managed so that we can get, so what we're going to try to do here is get more, what I'm going to try to do here, not try to, we are doing, I'm going to make the Twitter handles put out a short brief in the morning and at nighttime, a wrap up and a brief in the morning and very short. No thesis, just bull case, bear case, theta case in the morning, and then a wrap up for the day. And I'm going to make a drop account for myself. I think that happens this week at some point. So I'm going to have my own handle finally. I'm not going to tell I'm not telling anybody who it is. I'm going to tell a few of you. Probably like Winky and a few other people. I want to have a private handle so I can not talk about the stock market amongst friends. And it's not going to be Yimmy Yams. Although I do like Yimmy Yams. You'll find me. Yimmy Yams trading or something like that. I don't know. It's gonna be I'm gonna have a new Twitter account this week. It's gonna be just mine. Just so I can be like, hey, this is what I'm like. This is what I do in the weekends. This is what I'm doing tonight. That kind of stuff. The LCD sound system videos at 3 a.m. Just search for LCD sound system videos at 3 a.m. Search for videos where he there's another one that I do too. I got some friends from England and shit. I got some friends from England. So what I do is I'll take like English bands and I'll call them Australian bands, or I'll call Australian bands English bands, and piss off all my friends from Europe. Not Captain Jim James. I want some more privacy. So we're gonna turn them into data handles. Well, like straight faced. Do you guys remember when I still have it. The Captain's Alpha handle. It was just straight faced. So this is gonna all be just straight faced Captain Jim James for now on. And then I need my own private handle. I can't do it anymore. Can't fucking do it anymore. I gotta come up with a good name. I don't want followers. I want my friends, dude. Like, I loved my handle when I had like 300 friends, 200 friends. Like, sweet spots like 200. I think handles suck right when you hit about 1,000 people that are your friends. Right around like 200-300 people, it's fucking awesome. You can get really nice conversations, talk to people, that kind of stuff. You get their ideas and their thoughts. You can listen to other people, let them talk, and you just, get to know them and stuff like that. Oh, you're going to get drunk. You're going to get drunk, Captain, late night. Just not on that handle. You're going to get it on my own handle. With my... You know what I should do? I should be like, I should go out and Fentwit and be like, I went to rehab. I'm going to rehab this week. They're going to hook me up to some IVs and pump me full of shit. And I'll come out of it in 3 days. I shouldn't do that. It's offensive to people that actually have that problem. I was actually thinking this weekend, my oldest daughter was really tired, and I was telling her that she has plenty of time for rest when she's dead. I learned that in the Army. The Army taught me that. Plenty of time for sleep when you're dead. Pain lets you know you're still alive. Keep on trucking. Yeah. I don't want anything else. I don't want to be known. I don't want to be. I like that idea, Mr. Talking Monkey. But I need an outlet, man. Like, I need an outlet that I can just be normal. I always like hearing other people chat too, or there's like all these expectations and shit. I don't want those expectations. I just want to hear other people's ideas, their thoughts, and that kind of stuff. Yeah, exactly. Do they get their roll this time? Where's that half-hour trigger? Yeah, right down here. Nice little pullback. You will have no pullbacks. We have a short week, sir. You have a long way to go for that JPM collar. Just laser beams straight up. Violence to the upside. I will say this to you. I want you to be aware. Look at this thing down here, okay? I want you to make an alert for yourself just below 5,500 in SPX, okay? Like 54.95-ish. Snap a line for an alert. Send you an alert via email or text message. It's a pretty big wall up there, okay? 153 million. That should get a rejection. We also have a wall above at 5,500 and then 5,600. See that up there? I like that, Tessie the Tosser. I like that. I'll write that one down. So, a gentleman on Twitter saying 1 p.m. tomorrow for that GDP Now. So stay focused on that GDP Now chart whenever it breaks on public. Be aware of that GDP Now tomorrow, okay? Fed's Harker saying we need to be cautious, want several more months of data. Heads up on this too. Just a heads up out there. Jay Powell's giving a semi-annual monetary policy testimony at the Senate Banking Committee on July 9th. So you might catch some vol in there if you're looking for a volatility trade on July 9th. Harker today saying monetary policy remains positioned in restrictive policy. Keeping rates where they are for a bit longer will help get inflation down and mitigate upside risks. Over the ensuing months, I will continue to closely monitor data on inflation, labor markets, and economic activity. More data is essential to come to a decision on rate cuts given choppiness so far this year. If my economic forecast plays out, I think one rate would be appropriate by year end. 2 cuts or none are also quite possible. Depends on the data. I still forecast slowing but above trend growth, a modest rise in unemployment rate, and a long glide back to 2%. Last week's CPI data was very welcome, but overall progress on inflation in recent months has been modest. The long-term stubbornness of shelter inflation remains a concern, as does service sector inflation. Latest inflation data is quite promising, but falls short of confidence needed. Has not quite dissipated uncertainty. Fitch ratings, the U.S. is slowing, but only gradually, and our 2024 growth forecast is unchanged at 2.1%. Harker also saying it is fine to keep rates where they are now and wait for data. We are not even close to material deterioration in the job market. Globally, rates are heading down just at a different pace. Trading 547.49 right now. They said, fuck you, Cap, we're going straight up to trade 550.67 and 548.69. Give it to us all today on a short week. Tesla, let's take a look. Oh, sorry, turn these off. I wanted to leave this open here for this call wall at 5,500. Let's take a look at Tesla. Now trading 188.61. Holding its daily trigger, breaking above its weekly trigger. Next price target on Tesla, 214.37. 214.37. We talked about a full price target on Tesla of 280 and ultimately all-time highs. I do want you to know that I do own Tesla, so I do have reason to do what people do to you on CNBC. Push my ohm. Straight melt up today on Monday. Straight melt up today on Monday. New high at 547.52. I'm going to take a quick break here. I got to go potty. It is 1:56 in the afternoon, almost 2 p.m. Watch out for the sellers, like to start the hour out. SPY just grinding right now. Grinding. No time left to get to 55.65. No time left. GME getting sent to the depths of hell here. Trading their daily trigger. Whoop. Get rid of that GME down there. GME attempting to hold on at 25.63 right now. It's been where the dip's been being bought on their daily trigger. Once here, and right now we're going to find out if they get to buy it again. Paris still bleeding. SPOO's moving. IWM on their top of their resistance on the key up here at 200.04. I have them coming back down to 196.50 and then a trade to 201.65, but it could easily only pull back to its hourly trigger at 199.13 and then trade the daily trigger at 202.63. So be careful watching IWM. Q's off the chart. Q's, this is this morning's brief right here. Targeting 487.61 on Q's. VIX getting hammered right now still. HYG with a lot of room to run to the upside right now. Dixie getting blooded right now. TNX looking like it wants to roll over. Apple doing okay. NVIDIA grinding. Tesla ready to explode right now. No, you don't need that. That's just for work to be done. CCL on the comeback. Looking to trade 1578 and actually looking to close the door above at 1652 on CCL. All right, I'll be back with you guys. Give me 15 minutes.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
A very good afternoon, everybody. Live on Bloomberg Radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week for this Monday, June 17th. Carol Masser along with Tim Stenevec. Let's get to the setup on this Monday as we get ready for this week's heat wave here in New York City and across a big chunk of the United States. Tim, investors cooling a bit on treasuries, but not on stocks.
Yeah, the S&P 500 could possibly, just possibly, hit its 30th record this year. We're going to have much more on the trade in just a moment.
Today we are looking at energy over the next few hours in all of its forms. So our focus the next 60 minutes, the quest for the ultra-affordable EV in the United States, $25,000. Anyone? Anytime soon? I feel like we need to go. Bueller?
It's not happening.
We've been waiting.
Not happening. Plus, Bill Gates ready to plow billions of dollars into nuclear power. We're not talking about the big reactors that take decades and decades to build. We're talking about something completely different. The question is, can he pull it off?
Yeah, it's a great question. And as for some negative energy in the next 60 minutes, how about the double haters among the U.S. electorate? We're going to get into that over the next hour. First up, though, let's check on the trade for you and look at your top business stories. Here's Charlie Pellet.
Hi, thank you very much indeed. We are at the best level of the day right now, Carol Masser. The Dow, the S&P, NASDAQ all pushing higher, with the S&P on track for its 30th record so far this year. Back to work Monday, and we got the S&P up 47 right now, up by about 0.9%. Dow Industrials up 163, up 0.4. The NASDAQ Composite Index up 217, up 1.7%. 10-year 4.26%, with a 2-year that's yielding 4.74%. Gold down 0.7%, 23.16 the ounce on the precious metal, while West Texas Intermediate crude up 2% right now, back with an 80 handle, 80.01 on WTI. Activist investor Starboard Value says it has built a stake in Autodesk valued at more than $500 million and plans to push for changes to the board right now. Autodesk surging by 7.1%. Also, the Federal Trade Commission is suing Adobe, alleging that the software company violated consumer protection laws by making it too difficult for consumers to cancel their subscriptions. Again, recapping, stocks higher. S&P up 49 now, a gain of 0.9%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Okay, everybody, the good news for consumers wanting to transition to an electric vehicle, EV prices are falling fast in the United States. The not so great news is the cheapest models remain far more costly than what other countries have to offer, Tim.
So where is America's $25,000 EV and why can't we get there? With more on this story on the Bloomberg Today, back with us is Bloomberg News auto reporter Keith Naughton, who joins us from Detroit. Keith, first up, the good news. EV prices around the world and around the U.S., they're falling, right?
Yeah, and, there's no place where they're falling farther than China, where BYD sells an EV for under $10,000. So that competitive threat is really getting the attention of the automakers in America who are hustling to try and come up with a $25,000 EV. That's the new bogey. Can we come out with a $25,000 EV?
So wait, can they make money on a $25,000 EV?
Well, so a couple of things, Carol. They think they can, and here's why. One is it's going to be a smaller vehicle, so it will require less battery, and the battery is the most expensive component by far of an EV. And because it's priced so low, you would get higher volume. So they think the combination of higher volume and lower battery costs will lead to profitability. In fact, Ford CEO Jim Farley has said the $25,000 EV they're developing that will come in late 2026 needs to be profitable in its first year.
So why can BYD do a $10,000 EV? Other Chinese automakers do a $10,000 EV. But it's such a struggle and such a challenge for U.S. automakers to do it. Is it all just because of labor costs?
No. There's also the government of China that provides absolutely free money to those automakers. So government support, full government support that would not be legal in the United States or other Western countries, is a lot of what gives China the competitive advantage they have. But yeah, they do have the lowest labor costs pretty much in the world. They're lower than the labor costs in Mexico. And that also gives them a big leg up.
Hey, Keith, one thing I do wonder, does it make sense that it's taken longer to get the cheaper EV or the less expensive EV, if you will? Because so many of the automakers came out with, some really interesting models that folks liked, but they were super expensive. Is that logical as we kind of transition from, or transition, if you will, to more EVs, that it makes sense that they were more expensive to begin with, and now we can start to think about how we make them less expensive?
Yeah, I think the idea, Carol, was, like with any new technology, you start at the luxury end and then hopefully it trickles down. But I think what the automakers discovered was coming straight out of the gate with $70,000, $80,000, $100,000 EVs really narrowed your market. There's only so many people who can afford those sorts of vehicles. Maybe they should have been more middle market. GM now has an Equinox that is EV that is more middle market. It's a medium-sized SUV that will come down by the end of this year. Supposedly, they're going to have a base model that, with the government incentive, would put it at $28,000. So, and as we know, Elon is developing a $25,000 EV as well. It will be
or so he says. Or so he says.
Or so he says.
Not giving you a hard time, but it does seem like he says one thing publicly, right? We've all been kind of waiting for this mass market Tesla, and then reporting and so on and so forth says he's saying something else behind closed doors.
Then what will actually happen is the robo-taxi that he's now talking about, because he really wants everybody to view Tesla as an AI company, not an auto company. It's the same platform. It's the same vehicle as the $25,000 Tesla. So it seems to me they will produce a $25,000 car. Some of them will have steering wheels and some of them won't.
All right. Hold your breath for August 8th is what Elon Musk would say, because that's when the unveil is supposedly happening. Keith, we can't talk to you and not talk about historical parallels when it comes to what's going on with EVs in China, because you've been covering the auto industry for so many years. And I'm wondering, even though we don't see these cheap EVs coming from China into the U.S. and increasingly not looking like Europe either, is there still any sort of historical parallel we can look at when U.S. automakers have had to react quickly to a foreign automaker, maybe Japan in the 1980s, 1990s?
Yeah, absolutely. This is the 1980s all over again, except on steroids. because while certainly the government of Japan supported their automakers, nothing like the government of China supports its automakers. So you have this competitive threat coming, and sure, Joe Biden's 100% tariffs on Chinese EVs can keep them out for a while, but ultimately they'll be here, just like the Japanese came and the Koreans came. I mean, before that, the Germans came. Ultimately, they will be in this market, and that's why the American automakers
US stocks extend gains. S&P is up 1% now.
To catch up. You know, that Jeep now is owned by Stellantis, which is based in Europe. They are going to come with this $25,000 Jeep, Carlos Tavares, their CEO, just said a couple weeks ago. So
US stocks are headed toward fresh all-time highs as several big techs climbed, despite a jump in Treasury yields, with traders gearing up for retail sales data and a slew of Federal Reserve speakers this week.
Competition. Does the U.S. market need to be protected a little bit, especially when it comes to an EV mass market, before opening the floodgates, if you will, to foreign competition? Because sometimes I wonder if competition gets people to move a little quicker in terms of development, or so I'm curious how you see it, understanding development cycles and the markets.
Absolutely. And tariffs, let's be very clear, tariffs are inflationary. Ask any economist. They are inflationary. They don't protect the consumer. They protect the industry while it gets its act together. And that's what's going on here. Detroit made bets on big, expensive EVs. $100,000 Hummer EVs and the F-150 Lightning, when you get it all tricked out, is way up there. So, you know, they made bets on big electric vehicles that require big batteries to power them, and that turns out to be the wrong bet. So they need a little time to scramble, to go back to the drawing board, literally, and go down to the low end of the market and address the primary concern from mainstream buyers. I know we talk a lot about charging infrastructure, and that's a legitimate thing, but price, that's the impediment to EV adoption.
Keith, who's in the U.S. is closest to pulling this off right now? Is it Ford? I know I can't really call Stellantis a U.S. company, but they certainly own some U.S. companies. Is it GM? Is it Stellantis? Who is it?
I think it might be GM. I mean, Ford's a $25,000 EV isn't coming until late 2026. GM says they'll have their revived and revised Chevy Bolt out next year, and that already was the cheapest EV on the American market before GM stopped building it in December. But they're coming back with a new and improved one next year. And as I said, they have this Equinox that's out there. So, you know, they may be the first ones to be out there with an EV that starts in the 20s. But everyone is going to catch up real quickly. Tavares wasn't specific when he was talking about the electric Jeep. He just said it will come to the U.S. very soon. So, you know, within the next 2 years, we're going to see a whole bunch of more affordable EVs from the U.S. makers.
Okay, they're not U.S. makers, but I'm wondering where the Korean companies are with all of these, like the Hyundais and the Kias.
Well, Hyundai and Kia have some really nice EVs that have been popular with consumers. And so, you know, they don't qualify, particularly the ones that are made in Korea, for the $7,500 federal tax credit. So Hyundai and Kia, which is the same company, are just biting the bullet and still giving that discount to their buyers and just taking it out of their hide. So, you know, they are being very aggressive and competitive. Hyundai feels like they can completely reset their brand and become an EV maker in America.
Let's just hope the charging systems are ready for this mass adoption of cheaper EVs. Fingers crossed. I see it at the highway stop centers. There's not a lot of places necessarily to charge up. Keith Naughton, always appreciate it. Bloomberg News auto reporter Keith Naughton joining us from Detroit. All right, we're going to stay with kind of alt energy renewables to one of the richest individuals in the world who's getting supercharged over nuclear energy.
On that, it's one of our most read stories on the Bloomberg terminal about the world's 6th richest person who says he's ready to invest billions in nuclear power.
We are talking about Bill Gates, who made the media rounds this past weekend, talking about his investments in nuclear power and got into the political momentum behind nuclear on CBS Face the Nation this past weekend.
Of all the climate-related work I'm doing, I'd say the one that has the most bipartisan energy behind it is actually this nuclear work. If we unleash the innovation power of this country, we tend to lead. And I feel great about the support we're getting from the federal government in this nuclear space.
All right, with more on what Bill Gates is up to, the political will behind the nuclear power, and the rebirth of what it seems like nuclear. Return again to Will Wade. He's Bloomberg News Power and Renewables Energy Editor, right back in our studio. So, Will, good to have you back. It feels like this is becoming a weekly thing when it comes to nuclear. Bill Gates investing in next generation nuclear power, a plant project in Wyoming. What do we know about it, and why is it next gen?
Okay, so Bill Gates is invested in this company called TerraPower, and they're developing a new kind of nuclear reactor. So traditional reactors use water. The fission reaction heats up the water makes steam, the steam makes electricity. He uses liquid sodium. So it's not water, it stays liquid at a much higher temperature. So that allows it to use more of the heat from the fission reaction, so it's a more efficient type of reaction. So it sounds really cool, and if it works, it will be cool, but what's different...
Wait, did I hear if it works?
Well, he hasn't built it yet. He hasn't built it yet. No one's built one yet. But the theory is very solid. There's a lot more energy there. It's years away from completion, so there's obviously a lot of risk between, now, they just broke ground on it last week. They don't even have permission from the NRC to actually build the reactor part. So yeah, there's a lot that still needs to happen, but it's a new technology. That's why they call it advanced nuclear.
Are any other countries doing this right now?
Oh, there's a lot of companies working.
Countries.
There's a lot of countries working on advanced nuclear designs. There's a lot of companies.
But has anyone pulled it off yet?
Oh, no.
That's what I'm talking about.
No, the thing about nuclear is it goes...
I'm sorry if we're skeptical a little bit.
Oh, don't be. That's okay.
Or should we not be? That it's
you
just
should be.
Okay.
No, you should be. The thing about nuclear is that it just goes really slowly. So you can have me in here every week, but not a lot's going to change between them.
A little preview from Will Wade.
Right. But you remind us that some of it has to go slowly to make sure that it is safe, it is secure.
Yeah, nuclear has some risks. This is real, which is why they are very careful about how they take every step. And all of these things are new designs that have to be perfected. I mean, we were just talking about all the new EVs. They've been around for, a long, long time, and they're just getting perfected.
Why, Will, are people betting on this smaller new type as the way to move forward with nuclear rather than the proven tech that, yes, is expensive, yes, takes years, but we know works?
So the model that people want to get to is, they call it an SMR, a small modular reactor, where you can build the pieces in a central factory, and they're small enough that you can put them in a shipping container and deliver them on site and just bolt them together. So once we get the technology perfected, which maybe is a mid-2030s type of thing, but if that happens, you just have them turning off the assembly line and being delivered.
Tim's shaking his head. I mean, the timeline and all of this, I understand we have to be safe and careful and secure, but it's kind of mind-blowing when we think about, we're watching climate, we're talking about a killer heat wave, which we're going to talk about later this hour here in New York, but across 60 million Americans this week, and we just see the effects of climate change rapidly changing our environment.
And Will, you got to forgive me being so skeptical when it comes to timelines here. You're just back from Georgia and Vogtle 4.
Sure.
And, remind us about the timeline there for something that had proven technology.
Yes, the Vogtle 3 and 4 project, it was just completed, and the fourth one went online just a couple months ago. It was 7 years behind schedule. It was 150% over budget. I just did the math earlier. It came in about $35 billion something to build these two big reactors.
Right.
It was a painful process, but people are happy that they've got it done. They're happy they got it across the finish line. Whether it is something that is a motivator to get people to do another one, or if it's going to scare people away, is still the question.
What do you see? I thought it was interesting, Bill Gates saying that the country, I feel great about the support we're getting from the federal government in this nuclear space. What have we seen in terms of the political opinion, if you will, on this? I mean, people's opinion is certainly one thing, but what we are seeing in terms of politics and where politicians and also the federal government, how they are weighing in.
Oh, I literally 20 minutes ago, I was watching Jennifer Granholm, the Energy Secretary, do a presentation out in Vegas at the big conference. She was talking up all of the things that the Biden administration has done. They are very supportive of the nuclear industry. They've got the production tax credit that came in as part of the Inflation Reduction Act. They've got the loan Programs Office is trying to throw billions and billions of dollars at companies to try and develop nuclear power. I've talked to Jigar Shah, the guy in charge of the LPO office. He's like literally begging people to submit applications so he can throw money at them.
Will, remind us in terms of the overall power that's used by the U.S. when we are on this path to net zero, what portion of that will be powered by nuclear energy?
Well, hopefully a lot more. Right now, it's 19%. That's of the U.S. energy mix.
Which surprises me, because I thought it just had gone away, but that's just my
No, actually, if you look at the charts of where nuclear fit, it's been rock steady. It has hardly changed. But their goal is to triple it by 2050, which is just a lot. It's an enormous amount. And
we're also using more energy too. So that's the thing.
We are going to start using a lot more energy. Like energy demand in the U.S. has been more or less flat for the last 20 years, but we're seeing projections for it to go way up in the next couple of years.
Biden administration, Bill Gates says he's ready to invest billions more, so he's ready certainly to do his part. Great stuff. Thank you. Appreciate being able to check in once again with Will Wade. He's Bloomberg News Power and Renewable Energy Editor. Later up this hour, Tim, we're going to do a little bit more about the climate. We teased, we've all been reading, getting ready for a mega heat wave here in the New York metro area.
Yeah, we're also going to be talking about wind power a little later in our radio program during the 4 o'clock hour. Coming up next, though, the great Google DeepMind shift. That story when we come back on Bloomberg Business Week.
Instead of AI here or there, why not put AI to work everywhere?
The world needs ways to reduce carbon emissions,
especially for heavy industry.
We're working on solutions in our own operations,
like carbon capture and clean energy from hydrogen.
So who are we?
Believe it or not, ExxonMobil. And these solutions can help businesses like yours.
Or yours.
Or yours.
Heavy industry with low emissions. Let's deliver.
If you listen carefully, you'll hear a rhythm in the markets. The markets compose their own tunes, and once you learn to listen for them, you'll catch yourself humming along.
Context changes everything. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month. From the world of politics to the world of business, 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lyons deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything. The top names in business are on Bloomberg.
The valuation environment has fundamentally changed. Private equity sponsors are just going to have to hold companies longer, are going to need to take on equity to get some refinancings done, and returns are going to be lower over the next few years.
If you go back all the way to 2007, we used to have a high interest rate environment. We used to have high prices, and if you look at those vintages, even the GFC vintages have done actually pretty well in the end.
Bloomberg. Context changes everything. The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. tune in for continuing coverage on Bloomberg Television. Context changes everything.
It's 2:21 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got the Dow, the S&P, NASDAQ trading very close to session highs right now. S&P up 0.9%, extending its year-to-date gain now to 14.8%. The Dow is very close to session highs, up 0.5%. Right now, we have got the NASDAQ Composite Index up 207, up 1.2%. NASDAQ 100 Index, full of those big tech names, doing a little bit better, up now by 1.4%. The Russell 2000 taking part in the gains as well. Small cap shares up by 0.8%. 10-year 4.27%, with a 2-year right now 4.75%. Gold is retreating 0.7%, 23.17 the ounce, while West Texas Intermediate crude now at 80.12 a barrel, up 2.1%. Bottom line here, we've got several big techs climbing despite a jump in Treasury yields. American Airlines and its flight attendants will be meeting for contract talks tomorrow after making some progress toward an agreement that would avert a walkout in the summer travel season. American among the airlines moving higher today, American up now by 1.1%. Recapping, S&P trading at a record, up 50 now, up 0.9%. S&P on track for its 30th record this year. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, sometimes technology, innovation, and disruption actually involves a company doing just that to itself. Enter Google, home to two elite AI teams, Google Brain and DeepMind, and disrupting that, Tim, by combining it into one AI super unit that it calls Google DeepMind.
Let's get to this Bloomberg Business Week story. You can read it on the Bloomberg and at bloomberg.com/businessweek. With more, with us in the Bloomberg studio is Business Week technology editor Joshua Brustein, who joins us in New York. So Joshua, remind us what these two labs were doing separately and why Alphabet, the parent company of Google, decided to bring them together.
Yeah, so Google has, for about a decade, been pursuing AI in various ways. And it has a history of kind of doing things very far away from trying to make a product out of it. And also actually has a history of having two competing departments trying to do the same thing. So they had a homegrown unit called Google Brain, which came out of Google X, which is its moonshot lab. And they spun that out of X and started working on some AI products that were making into, that were actually ending up in some of the commercial products. And then I believe in 2014, it acquired a UK-based AI shop called DeepMind, which was working on using AI to beat video games. And this was seen as sort of the foundation for much more ambitious AI projects.
Maybe years ago, people would have heard of DeepMind because it was able to beat a human at Go.
Yeah.
Which I think a lot of people, when that happened, they were like, what's Go?
Yeah.
Because it's not a very popular game in the U.S.
So
that
many
was certainly
questions.
my reaction to it, but that was
But also
when
a
it
really
first
seminal moment in
Exactly.
AI development. Like this was seen as like groundbreaking and sort of scary for a lot of people at the time. Like if AI can do this, what's next?
Well, speaking of seminal moments or important moments, OpenAI's own work, a paper that they were talking about, GPT-3, that was back in 2020, a bit of a wake-up call for Alphabet and Google in terms of their own work on AI?
Yeah, absolutely. So what happened was Google had built some of the foundational technologies that went into GPT-3. They built a type of technology called a transformer, which we don't have to go into, but it is the basis of a lot
so many questions always. Go ahead.
But a basis of a lot of the modern large language models. And Google read what OpenAI was doing in 2020 and realized, oh man, we are building the science here, but someone else is building the products, and that is not where we want to be. And so that kind of kicked off a sort of self-examination to figure out, like, why aren't we doing the things that are actually going to make AI work with consumers out in the world?
So bring us up to speed on where we are today, because I think a lot of people probably saw a few weeks ago when those viral Google search results went around that suggested that people were okay if they were to eat rocks, for example.
Yeah.
Because doctors said that was fine.
Exactly.
Explain what happened here.
So about a year ago, Google ended up combining those two labs that we mentioned in an attempt to have a more OpenAI-like process to get stuff out, to really start putting things in front of Google customers. The event you're referring to was from a particular product that would sort of summarize search results in using large language models.
Which everybody who's Googled recently has seen this.
Yeah, absolutely. This was like...
It's the first thing that shows up on the page when you search for something, and it says this is a lab result, it's experimental, but nonetheless, oftentimes it's right.
Yeah, absolutely. They wanted to have some of this. It started showing up. A lot of people think that, chatbots will eventually replace the way that we do Google search. And Google's very worried about that, obviously, because that's where a lot of their revenue comes from. But like all large language model-based products, the Google product had a tendency to hallucinate, which basically just means make stuff up. They started summarizing the web by taking things that were in fact on the internet but were not great ideas. I believe one of them was to eat rocks. Another one was to put glue on your pizza.
Okay.
To be fair, sometimes they were using the onion as the source for this stuff. So.
Do not put glue on your pizza. Do not eat rocks.
What if the
Although
cheese,
I do have a dog that eats
what if
rocks.
the cheese is falling off, Carol?
Do not put glue on your pizza, okay?
Noted.
Just, use your brain here, everybody. Combining the labs, though, what does Google Alphabet, I never know which one to choose, but what do they gain by doing that? What might they lose? Because sometimes folks say internally they like to have different units because they kind of compete against each other and everybody gains or everybody's smarter because of it. So what do they gain by doing this? What might they lose?
Yeah, so the thing they were hoping to gain was to put everyone who was working on advanced AI within Google and get them pulling in the same direction. And that direction was to not only be pursuing AI projects that might be interesting, but to actually have AI projects that would be products sooner than later.
Yeah.
So that's what they would gain. And they have been releasing products. There have been some hiccups, as we've talked about. That is par for the course in AI, frankly. The thing that they could lose is that Google really has done a lot of the foundational research with AI, and they did that by giving researchers a lot of freedom to kind of pursue what they wanted. They worked on small projects. They weren't given commands from on high, and you get surprising work that way.
Right, and think about really like that free time, right, to kind of figure out what could we maybe do.
Exactly, like the classic Google 20% time is that's always been part of Google's culture, to kind of experiment and do things that we trust will pay off eventually.
Search and advertising, fundamental to Google's business. I mean, make no mistake, this is an advertising company that makes its money from advertising. But if we think beyond what Alphabet is trying to do when it comes to AI, what are the quote-unquote moonshots, for lack of a better term? Like, yes, we understand that it wants to protect its search business, Joshua, but what else does it want to do beyond that?
In AI, you mean?
Yeah.
I think at this point, there's a little bit of lack of clarity throughout the industry of exactly what the AI business is. It's been coming up on 2 years since the release of ChatGPT. We've spent a lot of time talking about chatbots. They are out there in the world. They are being used in various ways, maybe to replace Google search. I think that Google also has some other products and projects that we think about as AI that are not kind of in the discussion about, like ChatGPT. I mean, Waymo, for instance, an enormous AI project. Yeah. Those things are driving around the streets of San Francisco. The DeepMind lab is working on AlphaFold, which does a lot of work that could be really important healthcare work. But right now, looking for the Google search-sized AI business has not emerged yet. It's not clear. This is where we're going, and we just need to get there.
You talk about that, ultimately Alphabet wants products that are going to pay off for the company, right? That makes sense. They want all of this work to kind of have a payoff, whether it's in, like I said, offerings. Having said that, when they were allowing the two labs, right, they were kind of, offering up certain, computing power. AI takes a lot of computing power, right? And so they kind of had to allocate it too among labs and researchers, right? So there was a little bit, it sounds like almost of competition.
NYMEX gasoline July futures settle at $2.44 a gallon. NYMEX diesel July futures settle at $2.48 a gallon.
To, get that payoff.
Yeah, that's a good point.
NYMEX natural gas July futures settle at $2.78.
It's like kind of a grown-up Google a little bit.
Yeah, like you had, not only do you have researchers, like 3 researchers doing this,
NYMEX WTI crude July futures settle at $80.33 a barrel. That's up $1.88 or 2.4%.
GPT-4 or Gemini, that's Google's model. You need to be using most of your computing power, or at least a whole lot of it, on one thing. And that means having a top-down structure where you say, this is the one thing we want to do. And that's really new compared to how Google had been doing things up until a year ago.
So combining these two labs, Joshua, I know that Mark Bergen and Julia Love.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price
one of the leading
1 month.
AI companies. They are clearly doing things that keep them in the running. And there are things that the market's very unsettled, the tech is very unsettled. I think an interesting thing actually that's come up with the last year under this is up until around that time, people inside Google were unsatisfied because it wasn't commercializing things quickly enough. There were a lot of researchers who left, even ones who did some of the core technology for Google, saying, I want to go to a startup where we actually get a ship product. Now Google's shipping product, and there are people inside Google saying, why are we doing this? It was more fun when we could just work on whatever we wanted. So there is a tension here within Google about like, what is it you want to do? And you're always going to think, well, the grass is greener.
Interesting, right? Like, yeah, the payoff. Yeah, I was curious about kind of what the mood was internally. So it sounds like it's a little bit of a mixed bag.
Yeah, it seems like it.
All right, great stuff as always. And this story by our Bloomberg Business Week team. Joshua, thank you so much.
Great,
really appreciate it. Joshua Brustein, he's technology editor at Bloomberg Business Week. You can find this story on the Bloomberg and also at Bloomberg.com.
Hey, stocks are surging right now, Carol. We got the S&P 500 higher by close to a full
AI needed. Well, there might be some AI. Who knows?
The NASDAQ Composite is outperforming, up by 1.2%. The Dow Jones Industrial Average higher by 0.6%.
Yeah, pretty impressive. The rally continuing from last week. Coming up, the ranks of double haters are at a historic high. So what impact might that have on the upcoming November U.S. presidential elections? We'll get that story on the other side.
Before we get to that, though, we head from New York City to Washington, D.C. for a check on the latest world and national news. That's where we find Amy Morris in the Bloomberg 99.1 newsroom in D.C. Hey, Amy.
Hi, Tim. NATO says a record of more than 20 allies are now expected to hit the alliance's target for defense spending this year. NATO Secretary General Jens Stoltenberg announced that figure during a talk at the Wilson Center in Washington, D.C. Now, this marks a nearly four-fold increase from 2021 in the ranks of the 32 NATO member nations meeting the alliance's defense spending guideline. Only 6 nations were meeting the goal that year, ahead of Russian President Vladimir Putin's full-scale invasion of Ukraine. President Biden and Donald Trump made campaign appearances over the past weekend as they look forward to their first broadcast debate just 10 days from now. Terry Haynes is a founder of the Pangea Policy Group, and he tells Bloomberg both men face a skeptical audience.
Biden's got to show pretty much every day between now and November that he's up to the job and that he's the saner, calmer alternative to Trump. But also he's on stage with his major competitor who's going to do
U.S.
everything
oil
possible
futures
to try to
settled above $80 a barrel for the first time in a month.
Not going off the rails and coming in too hot.
Haynes says Trump remains relatively weak among independents. And the U.S. Surgeon General is calling on social media to include health warnings for kids. In an op-ed for the New York Times, Dr. Vivek Murthy says there's plenty of evidence social media is linked to significant mental health risks in young people. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Is it me or is work not working? At least, not the way it could work. Your people are buried in busy work. You might be thinking, can AI make it all work? It can. On the ServiceNow platform, AI transforms your entire business. Your people work better, your customers are happier, and Todd, well, he's practically euphoric. Practically. So, let's get to work.
Then putting your money where your mouth is and really trying to do something about the problem. And that's
Will
what I did
futures
with that
extend
business.
gains in post-settlement trade now?
Everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends. And I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Invest, don't trade. Invest for the long term, i.e. when markets are challenged, don't get spooked. Don't get involved in investment hobbies. Investment hobbies are generally not profitable.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ 100 index, all racing higher. S&P on track for its 30th record of 2024. Right to the numbers with the S&P now at 54.83. That is a gain of 1%, up 52 points. Dow Industrials session highs up 223, up 0.6%. NASDAQ now up another 216 points, up 1.2%, extending its year-to-date gain now for the NASDAQ Composite Index to 19.1%. 10-year, 4.26%, with a 2-year now yielding 4.75%. Spot gold down $14 the ounce to $23.18, lower by 0.6%. West Texas Intermediate crude oil up 2.6%, 80.50 for a barrel of WTI. The activist investor Starboard Value says it has built a stake in Autodesk valued at more than $500 million and does plan to push for changes to the board because of concerns about the software company's performance. Autodesk up now by 7.1%. Recapping, on track for more records today. The Dow, the S&P, NASDAQ all higher. S&P right now at a record, up 1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We are up to date on the markets on this Monday. We want to get up to speed on kind of some of the political thing that's out there. We want to talk a little bit about double haters. In the past two presidential elections, they were definitely a thing. Key factors in the outcomes could be again this time around, especially as there are twice as many today as there were this time back in 2020.
Well, let's head to our Washington, D.C. bureau to a Bloomberg News White House and politics reporter, Gregory Cordy, who we find there in our studio. So we got some new analysis from the Pew Center that you write about today, Gregory. What specifically did they look at when they were deciding whether or not to describe these folks as quote-unquote double haters?
Yeah, the definition of a double hater, and this is a cohort that we are talking increasingly about in this election, is people who say they have a negative opinion of both Donald Trump and Joe Biden. So they don't like either one of them, and that number is now 25%. It's a quarter of the electorate who doesn't like either one of these candidates. And what's remarkable is, as we look at these numbers, is that it's about double as it was even just 4 years ago. We think of 2016 as the previous high water mark of this double hater phenomenon, but this is a relatively new phenomenon in American politics. As recently as 20 years ago, it was very possible to like, say, both George W. Bush and Al Gore, and that's not true anymore. We have an increasingly polarized electorate where if you like one guy, you hate the other, and increasingly numbers of voters don't like either one.
It's amazing the people you talk to, and they're like, I'm not voting for somebody, I'm voting against somebody, you know, or I just don't kind of want to vote at all. Do haters equally dislike Donald Trump and Joe Biden?
That's really hard to get a handle on, and here's why. It's because it's what we call in polling a dynamic crosstab. People will move in and out of this cohort, and almost by definition, once you say that you are going to vote for Trump or Biden, you might be more likely to also say that you like that person. Now, when it comes down into November, that's what's going to be really critical here, is those people who remain double haters into November but are holding their nose and still going to the polls to vote for one or the other. What we do know is that from exit polls is that in 2016, Donald Trump won those double haters, and in 2020, Biden won. So this is a key group of undecided voters that both sides are going to try to move into their camp.
Okay, Gregory, we talk a lot about... Oh, go ahead. Please, go ahead.
No, as Carol suggested, it's going to be mostly through trying to get them to hate the other guy more, right? And that's where we are in politics right now.
Yeah, and we're seeing that as our own Joe Matthew and Kaylee Lyons covered earlier on the program today. We're seeing that with a big ad buy from the Biden administration, the Biden campaign that started today. Gregory, I do want to talk about the third-party candidates here and to what extent these could be the quote-unquote dark horse when it comes to the race here, and if those haters could potentially go to a third-party candidate.
Yeah, so here I'm looking at our Bloomberg News Morning Consult poll of the 7 swing states. These are the 7 states that are most likely to decide this election. And what we see in our most recent poll is that about a quarter of the electorate each of these double haters would vote for Trump and Biden. So about 25% Biden, about 22% I think Trump, but then 36% say that if the election were held today, they would vote for Robert F. Kennedy Jr. So, third parties could make some inroads among these voters, which is partly why, in addition to launching negative ads against each other, the Biden and Trump ads are also those camps are going after Kennedy and trying to get his negatives down and turn these double haters essentially into triple haters.
How many of these double haters just say, I'm out? I'm not even going to I'm not even going to pull a lever or whatever. I'm out. I'm not voting.
Yeah, I'm looking at that number, and it's about 17% say they would not vote, compared to 5% of the overall electorate. So that's the other danger here, is that these double haters just stay home because they just can't get excited about any of these candidates.
It's June, Gregory. We got July, we got August, September, October, all coming
Nothing
before
can happen
that November
between now
election.
and then.
Well, that's my question. It's not about what could happen. It's about how big of a grain of salt we should take this poll with, and frankly, every other poll out there right now, given that, well, a lot can happen between now and then.
Yeah, Tim, we talk about this every time we talk about polling, right? That there's all sorts of margins of error here. There's statistical error, but there's also the error that just comes from being 5 months out ahead when people aren't necessarily completely tuned in, haven't made a decision. You might have some late deciders. Obviously, we're all looking forward to that June 27th debate in 10 days between Trump and Biden. Kennedy is going to try to get on that stage. It doesn't look like he's going to meet the criteria to do that, but we're going to have an earlier debate than we've had in history, I think, in that June 27th debate. And so that'll give us voters an early look at putting these guys side by side and figuring out which one of these guys they like best.
Yeah, and a very interesting format, too, to say the least. Is there some assumption we can make, and I'm curious about the polling you guys have been working on, Gregory, when it comes to Robert RFK, Robert F. Kennedy, where those double haters who don't like maybe Biden or Obama, but maybe go for RFK.
Biden or Trump.
Biden or Trump, sorry. Whoa, where did I go with that? What would Freud say? But having said that, where those voters might go if they ultimately say, I'm not going to go for RFK?
Yeah, well, remember, there's also Jill Stein on the ballot. There's Cornel West on the ballot. We also have Chase Oliver, which is a name that people might not have heard much about. He was just over Memorial Day weekend nominated as the Libertarian Party candidate. And Libertarians can get 2-3% in any given election. And so he's worth watching as well. He would be more of a threat to Trump. Cornel West and Jill Stein might be more of a threat to Joe Biden. And then really, Kennedy is this sort of Sphinxian riddle, right? Because he is a former Democrat. Great Democratic name, right? His uncle was president of the United States. His dad.
Just a note here really quick. There's a little bit of roll happening here, a little bit of pullback going on, not necessarily bearish. Check the 1 minute trigger. Possible bear plane coming up the back. Check this 5 minute trigger. This is also our original target up here, 546.93. A little bit of a sell going on at PT2. Didn't quite get over it. Would like to still see us get above it and trade 550.67 by end of day. It looks like on a short week they want us up here so that we can ultimately trade 552 and likely 555, baby, before Opex
is calling up.
So still bullish here, still no negativity at this point. We are flattening out a little bit, but not necessarily bearish at this time. You would like to see a new low. We haven't seen it here. No new low right here. And then you're just looking right here for a new low.
97%. If you voted before, it really helps if you can
right there. As long as you hold above 547.49, 547.55, the move is up. You don't want to get caught in any kind of a trap in here either, so you are looking for a new high. There's a couple highs in here you got to get. A little bit of traffic in here.
Whether they're going to show up, and
there's some more traffic to the upside. You can see them coming in, trying to pile in until you know. So you want to get through all this stuff above to hit this upper target, this 548.70, and ultimately 550.66.
He's Bloomberg News White House.
But as long as this does not break here.
Ready for that searing heat? Are you ready?
No, I'm not ready, but it's already.
We're still bullish at the moment.
60 million Americans. One more thing. That's next on Business Week.
Leave that up right here for you.
Is it me or is work?
There's that PT2 over there.
At least, not the way it could work. Your people are buried in busy work. You might be thinking,
and I'll be right back with you. One more moment here, guys. I'm a little busy in the background.
On the ServiceNow platform, AI transforms your entire business. Because when your people work better, everything works better. So, let's get to work.
Get your elbows here.
Yeah, he's super nice.
The world needs ways to reduce carbon emissions.
Especially for heavy industry.
we're working on solutions in our own operations.
Like carbon capture.
And clean energy from hydrogen.
So who are we?
Believe it or not, ExxonMobil. And these solutions can help businesses like yours.
Or yours.
Or yours.
Heavy industry with low emissions. Let's deliver.
Funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well, because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested, they want to be an early adopter of the stock, they're interested in the story.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Now, your company news headlines on Bloomberg Radio.
Bloomberg World Headquarters. I'm Charlie Pellet. Coming up after the close of trading, we've got earnings from home builder Lennar and home furnishings retailer La-Z-Boy. Right now, shares of Lennar, they're up 1.2%. La-Z-Boy up by 1%. The Dow, the S&P, NASDAQ at or near session highs. Just over an hour to go ahead of the closing bell. Right now, the S&P up 49, up 0.9%. Federal Trade Commission suing Adobe, alleging that the software company violated consumer protection laws by making it too difficult for consumers to cancel their subscriptions. The FTC said Adobe pushed users toward annual subscriptions to its creative software such as Photoshop without adequately disclosing that canceling in the first year could cost hundreds of dollars. Adobe shares down now by 1.4%. The activist investor Starboard Value says it has built a stake in Autodesk valued at more than $500 million and plans to push for changes to the board because of concerns about the software company's performance and how it handled an accounting probe. Shares of Autodesk right now we've got Autodesk trading higher by just about 7%. EV makers are targeting a $25,000 car for the United States as high-end growth slows. Electric vehicle prices are falling fast in the U.S., but the cheapest models do remain far more costly than what other countries have on offer. Tesla up 5.4% today. Rivian Automotive up by 0.8%.
All right. Here we go.
Company stories that we are following for you at this hour. I'm Charlie.
Turn that off. All right. 3 p.m., baby. 3 p.m. Not a bad target, not a bad day, right? We have PT1 got tagged, slammed up to the daily RTXL, or STXL, I should say. We get up to this range up here. This is on a daily basis. You know, we're close. It's pretty close up there. Nice high range target. Let's take a look at this. Whoop. I guess these are hard to, once you start messing around with this stuff. You know, kind of a high range up here. I only had us going at this moment to 547. Pull back to the half an hour trigger. Trade up to 450, 452. Reject 450 and then trade 452. But we're, get a little long in the tooth up here on the day at least. Let's look at some weekly targets really quick and see what we got going on here. We're going to delete all this again. We're going to look at a weekly target now. Let's take a peek up here. 1 week. Bam. There we go. Let's take a look at the week really quick. And, oh, boy. Ho, ho, ho. On a weekly basis. 559. I don't think we get that, by the way. I think you're out of your skull if you think we're getting that. But on a weekly basis, this R1 up here, 551.72. 551.72. So that would be my target, 551.72, roughly 552. R2. Said R1, R2, I mean. How's on Q looking? This is what you got last night from me. You want to see how's the Q's looking, Cap? I don't know. Looks pretty good, right? This was your brief last night. We tagged it above right here. That's where the high target was right there, 486.91. Target pretty much complete at this point. So we got a little bit more to go. Where am I at? Hey, wait a minute here. Where's my chat box? Get rid of the chat box. Not the chat box. The old man break time thingy. Get rid of that right there. Get rid of that. Push that over. Go to the trigger full screen here. Do I think we're done going up? No. SPX. Wait a minute. Am I in the right place here? Bottom right-hand side. SPX. A little bit of a jump down over here, but the target is still 5,500 for SPX. We're not quite there right now. Some sellers trying to come in right now over here. Target 5,500, still not there yet. We also have the real target above, this red box, 5,560, 5,570. This is going to be a tough one to get through up here. So let me just show you where this is right here. If you can't see it, right there. Bam. Right there. That's the target. If we pull back up here, things could get violent. I want you to know that things could get violent in here. Local resistance, that was resistance, is now support. 5,450 is support. If that's what it takes to tag that 555, so be it. But I think we just go up there and handle our business today at this point. We have a very short week this week. We don't have a lot of time. We got today, we got tomorrow, and that's all we got. Wednesday, we're closed, right? Thursday, we're back on. We expect a sell to come in on Thursday, right? So maybe some kind of a pullback in here possibly, but I don't think we're done for the day. I think we run this bad boy up, hot sauce into retail sales. Right up there, tag 5,500. We're here. We might as well do it, right? So let's take a peek at that really quick. Let's see where we are right now with I bet you this translates. I bet you this translates to this R2 up here. Okay, this R2 551.72. That's the expectation from now into 9:30 tomorrow in the morning. From now into the morning. So, what is the plan here? Let's take a look. Let's see what the plan is for now into tomorrow. I'm going to give you two ideas here, okay? Two ideas here. I had us in here. I'm going to give you an alternate count for the Bears. An alternate count for the Bears. Right here. Right here, right? Yeah. Oh, yeah, Bears. We know that we do know, too, that dealers are buying cash market, right? And that they are selling futures, right, in this positive gamma environment. So maybe we still come back down here, trade that 543, clean that little gap up right there. And then we get our 550 or 5. Well, it wouldn't be right there, actually. I guess you guys like to see all the little bumps along the way, right? 543. How about we just do 545? Make it kind of simple once the hourly trigger gets there. Ricochet below here, back down over there, and then back up to this, above 550. This 552 right there. We're going to go to a 30-minute basis. Let's go to a 1-hour basis. Take a peek and see what we got here. Yeah, it's right down in there. You see it? It's right down in there. You know, there could be an argument made that it's right there. Could be an argument made that it's right there. Halfback trade. Right up there. Did we get the 550? No. What do we get here? 548? Yeah. I don't like this little area right here right now. Bulls still in control if they hold 542.20. If you really wanted to get bearish down here, if you really wanted to, bearish down there, guess that's your alternate count right there. Let's take a look at the half-an-hour velocity really quick. Yeah, see this right here? I think we can keep going up. You know, the bull thesis here is going to be that's the bull thesis right there. We don't lose 545. I don't even think we lose the 5-minute trigger. Just go straight the fuck up. I'll be honest with you. That's the bull thesis. If you're like Super Bull, you're going to get a quick pullback, and then we're going to go north and just blast it straight up. 551.72. They just buy it. Run it right up into the bell today. If we don't run it up into the bell, I would expect that pullback. Not ricochet, but sell 550, and then a really fast move up to 552. Pull back to 545, 550, 542, 552 right there. Bear case scenario. You'd have to lose 542. You'd have to lose this entire thing right here. Target right there. And the truth being told, the target is higher. The target is right here. Right up there is the target. It's way up there. Way up there. I'd really like to see this happen before. I'd really like to see this happen like Tuesday close. Where's Tuesday close? Tuesday 1 p.m. would be better. Right there. That's what I'd really like to see. Something just like that. It could take until 4 p.m. on Tuesday. Like where we do just the creepy crawly up the wally. Bam. Right there. Bam, bam, bam. I'd like to get this done. I don't know if it takes into the weekend, or not the weekend, but like Thursday. It's time or price. It's either going to be like tomorrow at 1, tomorrow at 4, Thursday open. Time or price. Put some time on it. That's the target right there. I think that we sell Thursday into the 26th. You get your unclench, but that, even that is, even that. That pullback, I'm not expecting too much. Maybe a low, the worst case scenario into the 26th. I mean, you're talking about like 545. Trade 556, 545. Best case scenario for a bear. So if you think we're gonna squeeze up here, and then it's gonna be more like that over there. It ain't gonna be like this. None of that shit's happening. So 556.0, 557.0, pull back to 545. We ain't got a lot of time to do it, do we? So even when you get that roll, don't be having expectations of 5. You might get there, but I wouldn't be having an expectation of it. I would not be having an expectation of it. And this would not shock me either. Just go straight there. Like down and up. Down and up. 552, 550, 552, 556, or whatever the equivalent is on SPX. Maybe it's $1 or 70 cents. I think the other day it was 70 cents lower. So that would be 550, 530, somewhere in there. And the fucking Bulls are in charge. And not only that, they've got the level at 545's 5450 right here is support now. As of right now, it is. We just turned it into support on SPX. And we still can go up here with velocity on a 30-minute basis. So we're running out of time here. You get what I'm saying? Well, you know, they net sold financials, but they started buying them last week. They started fucking buying them. So I'm with you on that, Jimmy. They might follow. That might be the leg that we need, brother. That might be the leg that we need. You know what, though? I'm going to tell you guys something. Take it from experience. You walk into a quarterly Opex, right? And they will, like, run it. They will run it. They will run it. And then they'll run it down on you for, like, brief moments. So, like, remember we talked about that Opex trade, right? Like, they'll bloodbath at 0.5% and then straight up. So even if we get blood, even if I want to tell you guys something out there, okay? Even if we get a little bit of blood and you're like, oh shit, Captain's wrong, it's going to go to the depths of hell. It's like half an hour down and then double up. It ain't like half an hour down, like down straight and then start rolling. It's, whoopsie. You know, this is what you're doing. You see the 50% or the half a point down, and you're like, it's going to roll depths of hell. Nope, it's going to go double up. Double up. So if you get a chance for a bloodbath for half an hour or 2 hours, it's just another opportunity to buy the fucking dip to where they're heading up here. Be harder. I read that. That's the expectation. Find a dip to buy. Hopefully you can buy one. Hopefully you can buy one. I'm just going to draw that fucker right in there. Right there. Boom. Hopefully you can buy one. Hopefully you can buy one because otherwise we melt up today. Tuesday, right? 9:30. Tuesday, 9:30, 8:30, 9:30. 9:30 right there. Woof. Pullback. Regular bullshit pullback in there. You're either going to get this into the close, pullback up into the open 9:30 tomorrow. Retail sales, GDP now, baby, 1 p.m. That's not really, hopefully. I think it's more probably. Fair chance. Fair chance if it happens sooner than later. Here's your high back here. Whoop. Oh, Winky. Winky face. Are you in the audience, Winky? Dude, did you know that Larry Williams' daughter is Michelle Williams, dude? Did you know that? She's hot. She's hot. I'm not gonna lie, she's hot. She's hot. Winky, if you're out there, dude, did you know that? Did you know that Larry Williams' daughter is Michelle Williams, the famous actress? I didn't. I didn't know that. You knew her? You knew that? I didn't know that. I didn't fucking know, dude. I didn't fucking know that, dude. We're going to go from the weekly expectation to the daily expectation. So here's your weekly expectation. I'll just draw this in. This really isn't even your weekly expectation, is it? That's where it is right there. This is your intraday expectation right here, 548.70, 550.06. Three o'clock in the afternoon. We got time. We got an hour. We got an hour. We got an hour. I mean, look at these sellers coming in up here. They're like, fuck you, no. Look at that. Look at that bookmap sellers up there. You shall not pass. Yeah, it is, Winky. Yes, it is. Yes, it is, Broseph. What are you guys talking about? What are you guys are talking about? Climate change? I don't know, man. I was talking to my... It's a really fucked up subject. Climate change is a really fucked up subject. And I think it comes down to like I don't know. I'm not going to discuss it here. These guys here do not want passing here, do they? They're going to get passed, though. We're going to pass them. Is the market climate change? Global bearing versus global bullying. Oh, the pools. So I ordered a pool. I think it was the same one Addie ordered. I got the XR 32 by 16. Kids freaked out. Wife said yes. What did I do? This weekend I went and ordered, I couldn't get the guys out on Saturday. I ordered the soil. I ordered mason sand, about 10 yards of it. And then when I couldn't get anyone to work on Father's Day weekend, what did I do? I ordered a rental Bobcat, and I fucking moved it myself. I had him dump it from a truck, and then I loaded it up with a Kubota or whatever. And I pushed it all around, flattened it out. And I think they get delivered. It was a blast to drive. Dangerous as fuck. I almost killed myself at least 3 times. At least 3 times. What else? What else? I already have power out there. I heard a bunch of shit to go along with it. And the kids are ecstatic, dudes. Like, kids are going to fucking love it. They're going to fucking love it. So it's like Party Central for kids. I talked to my wife about your suggestions. I said we have a fence, but I'm going to do another fence, I think. And I also talked to my wife specifically about kids are not allowed to go swimming without their parents here or my wife or I outside watching actively. And even then I told my wife, I'm like, yeah, we should, if their parents want to come over and swim with them, I'm like, I don't know. But I'm like, there's no fucking way that kids are watching kids. No goddamn way. And that makes sense to me. I was a lifeguard when I was a kid. I was a lifeguard. I surf and I swim. I'm a good swimmer. I can swim in anything. I'm not fucking afraid of anything in the ocean. Zero. Nothing. Right? Nothing in the ocean scares me. And I've seen some scary ass shit in the ocean. My fucking father capsized a boat in the ocean with my brother and I on it when I was a teenager. And we lived. But that doesn't matter. You can't take your eyes off of kids. You can't, that's not even just kids. I was talking to her this weekend and I was like, you know what it is? You shouldn't swim alone. As a human, you shouldn't swim alone. Even if you're a good swimmer. You shouldn't swim alone. There should always be like a partner there, battle buddy or something. I don't even care if it's 5 feet of water. Like, you know how many people die in bathtubs? It's like huge. People get hurt in bathtubs all the time. So, yeah. Oh, really? Non-monogamy? Hot tubs and pools are fastest way to non-monogamy. It was kind of funny that you say that too, Winky, because I was talking to my neighbor about it, and I was like, dude, bring the kids over, we'll go swimming and have the kids have fun. And the neighbor said, fuck the kids. I want to go over there at nighttime and go swim with you guys. He's like, I don't care about the kids. I want to hang out. I'm like, okay, cool. But anyways, you know, the best part of it is this. It's salt water, sand filter. I suppose that's easy to take care of. And it's not permanent. So once the kids stop playing with it, I'll throw it on Facebook and sell it to somebody. And I guess you can use the same liner in these things. I guess some of these above ground pools, if you move it, you have to get a new liner. This thing you can like give to somebody to keep. So I'll pass it along to some other dad or mom out there that has kids. Upside down pineapple. Was that that's the swinger thing? I'll put pineapples out in front of my house. Looking hilarious. That's so gross. I'm thinking about it in my head right now. I'm like, quit kids swimming around, like parents having sex in the pool. That's just nasty. Bunch of old, creepy old people. Blech. Anyways, we got the pool. So the kids will be happy. It's hot. Neighborhood kids are already excited about it. What else? I think that's all I got for you guys for today. We're going up. We're melting. I would say 2 things or 3 things to you at the end of the day today. 1, bumpy road is a possibility. If we begin to lose the 1 in 5 minute trigger, be very careful of a quick move down. It could go below the hourly trigger for like a half an hour. Also, be aware that Thursday, 21st, said it in the stream earlier, 21st to the 26th, right? 21st to the 26th, window of weakness. Pullback likely to 545 on that window of weakness. Get ready for a dip buy over there for June 19th. Although there's usually another down period in July. And it was just announced today that on July 9th, Jerome Powell will speak in front of the Senate. So 2 pullbacks, June 26th or 21st, 26th, a run up into the 9th and a bloodbath on the 9th, and then a run up into the 20 or the 19th. That could extend into the end of month for July, and then we're going to have range expansion. Buy the dip, sell the rip. Buy the dip, sell the rip. And then an election volatility trade into from September 9th until October 19th or something. I think I might have that last part wrong. It's in the stream earlier today. If you want to go back and check it. Yeah, it's so gross, right? Ugh. Nasty. Old people don't care, though. Oh, I'll say this. As I get older, I'm not a swinger or anything, but as I get older, my inhibitions are gone. Like, they're gone. I don't give a fuck about if I see someone naked or from like, you know, like I understand. As you get older, dude, you know, like when I was younger, I was always like, you have different ideas about that shit. When you get older, you're just like, I don't give a fuck. Like, that doesn't shock me. I have a buddy that's a swinger, and it didn't faze me. But he admitted it to me too. It doesn't faze me as I get older. When you get older, you don't give a. It's called like not like you ever notice like boomers don't give a fuck? They don't. They don't care about anything as they get older. Nothing surprises a boomer. Okay, that's all I got for you guys. 3:24 in the afternoon. Possible melt-up situation into the close today. Ow. I fucked up my hand. Have you guys ever run a dingo? I think that's what it's called, a dingo. So I've run a bobcat, right? I don't know. The dingo is the 2 things I didn't like about the dingo were they're great for small jobs like an hour or 2. It's a bobcat that's with an open back on it. You stand on it rather than sit in it. The dingo is nice because you can jump on and off, on and off, on and off, on and off. But it's not as heavy as a bobcat. It's not as safe as a bobcat. So like there's safety concerns with it, but it's fun as fuck. It's a blast. But if you kill yourself, you're gonna die. It's gonna cut you in half. If you roll it, you're fucked. You're dead. You're dead. You're gonna see like half your body on the other side of the fucking lawn somewhere. I wouldn't learn how to ride one of those things on one of those dingoes, but that's what I rented. Well, I mean, like it's like a bobcat, you get rolled around, right? Bang your head, get a concussion. You might die. A dingo is like a bobcat with no cage, no rolled cage. The other thing that I didn't like about the dingo was I used it for 8 hours. And when I was done, I had like pain in my arms, and it wasn't like stress. It was from the rattling and the shaking and shit. And then you get whipped around a lot. Like the thing bucks. It bucks like a horse or a bull. That fucking thing wanted to throw me like I almost rolled it 3 times, and then it threw me around all day long. It was like all fucking day throwing me around. You hit like a divot or something, and it's like whoop. And so that plus the rattling, like that, like that shit sucked. That shit really sucked. It wasn't any fun. They're great though for like an hour or two. Oh, you know what else was cool about the dingo? It's small. It's got a small footprint, and I had some shit to move in the property. I have I don't buy fertilizer anymore. I make fertilizer, a tea, like I make a what do you call it, tea? I don't know, compost tea. Fertilizer is stupid expensive, so I don't bother. It's like $70 a bag. So I'm like, fuck that. So I do compost tea, but I had like a 50-gallon drum of it, which is I don't know what that weighs, but that's not light. That shit ain't light. I don't know what a gallon of water weighs, but I forget what it weighs. 20 pounds? I don't know. The weird robot lifter suit. It is like the robot lifter suit. It is like that suit. It's totally like that. It's totally like the alien suit. It pretty much is. It's pretty close to it. You can put anything you want on it. Fucking bucket, big ass drill, fucking all kinds of cool shit. It was like that suit though. It was cool. It was fucking cool. So, but I lifted up like this composting tea, moved it like it was nobody's business. I was like, where do you want it? Over there? You want it over here? Where do you want it? So that was really cool. Like anything heavy, you're just like, fuck that, grab the dingo. Yes, pool rules. Yeah. What did Joe Donut said something to me. He said he goes, my sister had a pool. He goes, and she had a sign that said, welcome to the ool. And so people would come over her house and comment on it and be like, where's the pee? And his sister would go, exactly. Yeah, it's similar to driving a skid steer. I've driven those too before. I've driven a skid steer, forklift, backhoe, bobcat. What else have I driven? Scissor lift. I don't know if I've done a bucket on a bucket truck. I think I might have once, and I was scared shitless. I think I might have done a bucket truck once, and I was fucking petrified. Yeah, okay. So it is terrifying, right? Yeah, I think I've done that once. I think I have been in a bucket truck once, and I was scared shitless. It was sketchy. It didn't feel right. Let's see. Stupid shit Jim James has done in his life. Oh, boy. Stupid shit Jim James should be dead on right now. Let's count the stupid shit Jim James has done. You know what I did do? I like things that are inherently dangerous, I'll try them once if I don't know it's inherently dangerous. If I know it's inherently dangerous, I won't do it. I started rock climbing when I was I rock climbed when I was young. I had a friend offer to teach me how to rock climb. I did that 3 times and said, fuck no. Fuck no. Easy death. I had to learn how to rappel and stuff in the Army. I did some top roping and stuff. I don't mind doing that on occasion. So like mixed climbing, I'll do that stuff. But as a sport, I'll never become, I would never, not anymore, I'm too old now, but when I was younger, I never wanted to become a rock climber, ever. Just because it's inherently dangerous. What else do I not like doing? No skydiving for me. Too dangerous. Inherently dangerous skydiving. Answer is no. Fuck you, no. What have I found out was dangerous that I didn't know was dangerous, though? Heavy equipment. Heavy equipment is inherently dangerous to you and people within 20 feet of you. And you probably don't know that. You probably think standing 20 feet away, you're safe, but you really aren't. You really aren't safe. Like, keep a good, 50 feet away from a piece of machinery. Machinery is unforgiving. It's so fucking dangerous. What else is inherently dangerous? Like, inherent, you're going to get killed at some point or cut a finger off, lose a hand or a leg. Submarine travel. Trying to think of inherently dangerous things people do regularly. Like driving a car is not inherently dangerous. If you drive safe and you wear a seatbelt, you have a very small chance of being killed. You've got modern airbags, that kind of stuff. Some things are inherently dangerous. Like you can be as safe as you want, and there's a good chance you're going to die at some point. Like you do it long enough, you got a good chance of it happening. What are some of those things that are inherently dangerous? Even if you follow all safety precautions. That would be like playing golf when it's lightning out, right? Thunder and lightning, inherently dangerous. Marriage. No, marriage isn't. You live longer being married. Marriage is not inherently dangerous. Marriage, kids, that all keeps you young. All keeps you young. In fact, facts. Scientific facts. Even if you get a divorce, you got kids, they'll keep you alive longer in life usually. It is funny, though. Yes, it is funny. Lies. What else is inherently dangerous? Oh, smoking crack, doing heroin. Opioids. You can diddle around with drugs. You shouldn't, but you can. Like opioids. No. Don't even try them. Don't even try opioids. Don't even try them. Like your friends, you never hear anybody saying, hey, you want to try some heroin? The answer is fuck you, no. No. The answer is no. Shrooms are great. Shrooms are great. I like shrooms. I was disappointed this week. Shrooms are good for you if you have depression or anything. I was a little disappointed in the studies that were just done on MDMA. That pissed me off. A fucking doctor. They just did this big science study on MDMA, and he was administering it to a woman, and they started fucking. I shit you not, that happened. Happened 2 weeks ago. The study came out. I was really disappointed in that. I think a lot of military people could do well with some clinical treatment with MDMA. I also think anybody with PTSD, marriage counseling. They used to do that with marriage counseling back in the day in the 1980s. Pfizer gave married couples in New York City MDMA for marriage counseling. So then these married couples would go to gay nightclubs and shit. Oons. Right? And then like the rave scene was like, that guy and that lady over there don't belong here. We got to find out what they're on. I shit you not. Pfizer used to give MDMA to couples in marriage counseling in the 1980s. And so you'd get like a straight edge couple in a nightclub. You know what else is crazy? You know what else is crazy? I just read a report, Michigan. A town in Michigan put up a report out yesterday saying that crocodiles in Michigan. I was like, you got to be shitting me. People out there wanting to do that crocodile? Like, you got to be kidding me. I thought that was for like Russians that were drinking too much vodka. It wasn't in Detroit. It was up in St. Clair, Michigan. That's like a really nice community up there in St. Clair. You know, the good old days. That's actually how I figured out everything was bullshit. Thinking about that right now, top of my head. My first time I moved to Vail, Colorado. I moved to Vail, and then I moved to some other nice places, and I realized that if you're rich, they don't care if you do drugs. It's only in impoverished places. They don't run like drug, what do they call them? Like drug interdiction or whatever, gang units. They don't have gang units in the rich neighborhood. You can do all the drugs you want in a rich neighborhood. Compounding pills next to the pool. I regret to inform you, Captain Jim James died of a slow death of ecstasy and crocodile by the pool last Sunday. He died in 48 inches of water. Trying to think of what else is inherently dangerous. Can't think of anything else right now. Inherently dangerous. Shit that you try once and you go, fuck no, I'm never doing that again. Never, ever, ever. You know what another inherently dangerous thing is? Ladders. Ladders are inherently dangerous. Inherently. You use a ladder a lot, you're going to fucking fall off someday. Eventually, someday, you're going to fall off that fucking ladder. Ladders are inherently dangerous. Prison. Someone just said prison tat. I'm shocked at the prison system's recidivism rate. It's not all because they're all still criminals. It's this like, what is it? Parole? They like trap these guys in there. I was reading about it recently. So like they'll give you like 10 years or something, or 20 years, whatever it is, 10 years. And they'll like let you out early on parole. And then they keep you in the system until you fuck up. And then they put you back in prison again. That's fucked up. That's inherently dangerous. You don't ever want to go to prison. If you ever went to prison, you probably would want to do the time in full and then get out and not have them watching you. People commit felonies all the time and don't know it. So if you're on parole, you're susceptible to going back to prison. Yeah, it's really bad. Like, they want you in you're a part of the system. There's like a system created here to keep you in the prison system. If you were convicted of a felony and we're going to go to prison, you'd likely want to do the time so that you can walk out the front door and be like, do I owe you anything? No, I'm out of here. Yeah, you pay people to ladder now. Laddering's dangerous. It's inherently dangerous. 100%. 100% dangerous thing that you could be doing out there. Things that are inherently dangerous. What else is inherently dangerous? I got one for you. Inherently dangerous. If you're a young person, trusting a woman that says she's on birth control, inherently dangerous. Don't ever do that. Forget venereal diseases. Just until they've got birth control for men. Do not trust. Inherently dangerous. Wrap it up. Wrap it up. Forget getting AIDS. Just making a baby. Yeah, don't ever flush an alligator down the toilet. They always come back to get you. Here's a good one. That's a good one. I like that one too. Yeah, drunk driving. Bad news. I was just reading about, or we were talking about that in the show recently. Ready for this? I got some crazy statistics. What did I see here? No, not past 5 years, lifetime. I couldn't believe the statistics I saw. It was crazy. No, not any given year, not every 5 years. The entire in your lifetime, it's insane. It's insane. And dude, like these days, there's no need these days. There's no need. You just take a Lyft. I'll do like Lyft and Uber. I fucking love Lyft and Uber. I love Lyft and Uber. You can get shit-faced and have them drive you around. Oh, dude, more than that now. More than 10K. It's got to be like after COVID. I thought it was like $15,000. It's got to be like 20 or 30,000 now. It's got to be $20 or $30,000. What do you guys think about what are you guys' thoughts on people that smoke marijuana and drive? I noticed that's really prevalent. What do you guys think about people that smoke marijuana or ingest gummies or tinctures or vape marijuana, CBDs, or I don't know. Do CBDs make you high? I don't know. What do you guys think about that? Yeah, just shush. Just don't say anything. I notice it. I notice that it's I tell my wife, I'm like, if I went into Home Depot and I smelled somebody that smelled like booze, like it just stinks of booze, it wouldn't be acceptable, would it? But if you go to the Home Depot, everyone smells like weed, I think, at least in a legal state. I think a lot of people are high when they drive. I think a lot of people are high when they drive. I think a lot of people are high when they drive. I think a ton of them are. Do you think a lot of people are high when they drive today? In a legal state, state where legal marijuana, do you notice people do they smell like weed? Yeah. Yeah, I see it a lot. Or I smell it a lot. I smell it when I'm driving, too. Like wafts through the vents and stuff like that. Yeah, exactly. Driving by. 100%. 100%. Yeah. I don't think they catch DWIs with it. I don't think that they do. I think that it's hard to prove. Or it's defensible. It's more defensible than a DUI or DWI that's like with alcohol related. You want to hear something crazy? So I had a neighbor when I first moved to Detroit, right? I had a neighbor and I moved. First house I bought. I moved and she had a home invasion. And so she called me in a panic. She's like, there's a man in my house right now. And I went over there. I went over to her house and the police didn't show up. And the guy that had invaded her home fled and ran through the backyard and dropped his phone. So I picked up, or his phone started ringing. And the backyard had like tall grass in it. Found the phone. I answered it. And it was a woman. And she goes, "Who's this?" And I was like, I just found his phone on the ground. And she goes, "Where did you find it?" And so I gave the cross streets. And she goes, "I'll be right down to get it." And it was the dude. The dude actually came back that did the home invasion. So I called the police a second time. And I was like, "Hey, I just came here to check on this lady. She had a home invasion. You guys haven't come down here. This home invader says he's coming back right now to get his fucking phone. Get down here." So the cops are coming back, right? And they were asking the woman and myself to write a report. And they didn't want us to say anything about drug use. They didn't want to say anything about drug use. They wanted us to just, he was acting erratic. He was acting this. He didn't look like he was on drugs. And then I asked later the DA why. And she said because it's hard to prove. Hard to prove if they're on drugs or if they're crazy. They don't want you to say anything about being crazy or drug use. That was the other thing that they said. Don't say anything like they're acting crazy. Don't say anything like they're acting like they're on drugs. Like, don't highlight that stuff ever. Oh, that put mafia, baby. That closing. Those bears want to see it down. Want to see that doom and gloom. 10 minutes left. You're looking for 543 by the time it gets there. 543. Half-hour trigger right now is at, it'll be at 545. And the hourly trigger will be at 543.78. 543.78. Anytime, brother. It's hard to regulate weed right now. There's no test, is there? There's no test like an alcohol test, is there? Like, when did you smoke? How high are you? It'd be kind of cool, though, wouldn't there be a test? I know you pot smokers out there you'd be getting your own tests. Who's higher? Dude, I'm so high right now. How high are you? Let's check. I bet you guys would be using a marijuana test just to see who's higher. It's like 4 drunks at a 4-way stop sign and 4 people high on marijuana. What happens? No, dude, you go. No, dude, you go. Come on, dude, you go. No, dude, you go. I can't do the edibles. I tried. I haven't taken edibles in a while. They're too fucking potent. I can't do them. Well, that's any of it, right? Yeah, truck drivers. If it's in your system at all, you're fucked as a truck driver. But if you're in a legal state, that's another thing that I notice. Gun owners be breaking the law all the time on marijuana. Breaking the law all the time. Yeah. Or the amounts of the number of gun like gun aficionados that I know that smoke weed. Oof, it's high. It is high. A lot of them smoke weed. That a lot of marijuana smokers are gun owners. Shit. Come on. Oh, did you guys see that Michigan has more legal marijuana sales than California now? Woo! Number 1. People from Ohio come to Michigan to buy their pot because it's cheaper. I won't name names. People on our stream. No, we're dip buying. No puts. Looking for a dip to buy. I already drew it out for you. We be buying dips down here for an upside move. We're going up. We ain't going down. We're going up. We're going up, baby. Up, up, up. Going up, up, up. Find a dip, buy the dip, and go up. All-time highs today. 548.53. Oof. Yeah, look for that retail sales in the morning, then GDP now at 1 p.m. Start tracking it around 10:30, 11:30 in the morning. Be ready for it to come out. That's going to be your other volatility tomorrow. Nobody's going to talk about that. Gamma Labs, they talked about it. Gamma Labs talked about it. GDP now. Yeah, you know what, Mr. Talking Monkey? I want to do that yen USD. I'll put that out tonight. Did I already put it out? I already put it out. That yen USD trade is real too. That's a real trade right now too. That's a big one. That is a big one right now, that yen USD trade. The pairs trade, that's a big one. Dealers say we're not going there. $0.27 for 552. Wait a minute. 550 is trading 26 cents right now. Dealers saying we're going down on the open tomorrow. Dealers aren't believing it. Dealers saying we're going down tomorrow. I believe 100%. I think on the surface, it looks like a down day tomorrow. I would think it tomorrow would be a down day. If we weren't in Opex, I would definitely think tomorrow's a down day. Definitely. 100%. I would think tomorrow's a down day if it was Opex. Or if it wasn't Opex, I would say we're going to roll. Not as convinced right now. Not as convinced. Only because of the fuckery on Opex. And we have one day off. Remember, tomorrow will be, not tomorrow, but Wednesday will be closed. Tomorrow will be closed. Or not tomorrow, Wednesday. So you get one more day left. Then we're going to come back Thursday, Friday. Can we go to the HT? Yeah, we can. A little bit of blood in the middle of the morning, then we rip faces off after. I got us going down to 545, 47, maybe 543. 543 and some change. But I think retail sales might help out. Like 8:30 in the morning. We have the down overnight, sell futures, come back in, get retail sales. Yeah, you're out by 1 p.m. Trading R3 at 546.74 right now to the bell. All right, I'll see you guys tomorrow, 9:30. Expect a brief this evening. I think I've given you at this point some pretty decent possibilities, right? High probability we go here, we go there, that kind of stuff. I think you guys should be pretty good for the week. You guys have a great day. I'll see all of you tomorrow at 9:30 in the morning. I hope you had a great weekend. If you're celebrating Juneteenth, fucking power to you. For real. We'll talk about that more tomorrow to the close. We'll talk about a little bit about that towards tomorrow's close. Like 3:30, we'll talk about that. Make real connections in life, friends in life. the importance for you to be a better person so we can change the bad shit in this world. I want you all to have a wonderful evening. Stay safe. Be good to your fellow human.